Well, good morning, folks. Bear with me 1 second here. Gotta make sure things are on the up and up. If you guys can hear me, appreciate if you give me a heads up on X. Just let me know if 5 by 5 you can hear me. All right. So we are looking at a new Trump presidency. And if you've been following me for a while, you know that I don't vote. Okay, I know some of you are going to be mad about that. Okay, and that's not what this is about. So if you're thinking we're going to be talking about politics, we're not. But I want to kind of like explain to you why Forex is now back on the menu. So there's going to be a little bit of reference to politics simply because it relates to monetary policy and global trade. And that's one of the major functions of the foreign exchange market. So if you've been wondering why Forex has sucked for the last few years, it's because you had an administration in power here um, that wasn't all that friendly for it. So and you might argue that Trump isn't going to be friendly for it, or wasn't friendly before, but he gets things done because he's a businessman. And unfortunately, whether you like it or not, the American nation, the United States, is a corporation, unfortunately, and it has to be ran like a business. So for the folks that's going to wonder why I don't vote is because I don't believe in the two-party system. It's a one-party system, and you have the illusion of choice. They share back and forth power, and they basically bend the knee to people that you don't see that really run everything. So that's my opinion, and you're welcome to debate about it and say whatever you want to say about it, but that's my opinion. That's why I don't participate in it. Okay? So, and you can't blame me no matter what happens. So, Forex has been pretty much a killjoy for a number of years. And when I publicly came out and said that I was not trading it anymore, because of the administration that came in, I was not comfortable with what was transpiring, not only there, but with COVID stuff, with the draconian things that were being implemented, not only in America, but in every other country. It was just a very prime environment for a black swan. And honestly, just because Trump has been president-elect now, doesn't mean he's ever going to get into office. Anything can happen, folks. You know, the man's up in age. Something unforeseeable might happen. Lord forbid. But it's a long walk between now and January 20th, let's just put it that way. And once he gets in office, he's already talked about some of the things he wants to do, and that's going to stir up the foreign exchange markets. Okay, they already started moving around a lot. Futures this week, on the heels of the Trump landslide, they had moved, as you would expect, one way higher. And if it would have been more leaning towards Kamala, which would have been a shock for me, why anybody would have voted for her. She didn't even campaign long enough, and she doesn't have any policies. So if it were going to be heavily weighted towards her, like they did in 2020, and yes, I believe absolutely it was freaking stolen. I almost slipped in there. I wasn't going to cuss today. They stole it. Where's the 15 and 20 million votes that was there in 2020? And it's a record turnout for mail-in ballots and in-person voting. Oh yeah, math, it matters. So because of that uncertainty of whether they are going to rig it again and give it to her, basically, the the uncertainty of that. If it would have been like that, you would have seen a whipsaw election night around 9 o'clock or so. It would have went both directions wildly, like a FOMC type event. And then the real move would have transpired. But as everyone was watching, the election was unfolding in Trump's favor. So obviously, like him or not, as a person, it doesn't matter. It doesn't matter what he does with his personal relationships. I don't care. I don't sleep with the man. I don't spend his money. And just because you go bankrupt in a business doesn't mean that you failed. It just means that you keep what's yours and you keep creditors away from you. And it sucks as a creditor if you're owed money, but that's unfortunately the perks of being a incorporation. When you incorporate yourself and you create a business entity, you have a lot of luxuries that are afforded to you. And just because someone files bankruptcy, corporately or individually, doesn't necessarily mean that they're broke or that they failed. It just means that they washed their hands of the requirements monetarily and obligations, and they can restart and respawn. And you do it all the time if you play video games, but you don't think it like that in the corporate world because you're financially illiterate. And anyone that's not trained to think and taught how to be an entrepreneur, they don't see that as an advantage. They don't see that as something that you would want to have because, unfortunately, things that like COVID, they put the squeeze on people, and a lot of corporations went under. A lot of companies went under. A lot of mom and pop businesses went under. And that was kind of like what I was warning about with Forex, because the administration that was coming in was not going to be supportive for that environment. Now, it doesn't mean that people didn't make money. That doesn't mean that people using other strategies with mine or without mine weren't making money trading Forex. But you have to really admit that the last few years trading Forex has been kind of lame. It's been really lackadaisical. And now just recently we've had this, this breath of fresh air come into it, and it's moving around. And that's exciting, isn't it? So while I don't think we're going to have the early 2000s or so type volatility where it was moving around wildly, which made me leave all other forms of asset trading and went to Forex predominantly. That I don't suspect that that's going to be the case here, but it certainly is going to be better for Forex traders into 2025. So that Trump effect is going to, spread throughout all the asset classes. And you're going to see a whole lot of loosening up of markets that have been strangled for the last 3.5, 4 years almost. And that should be exciting for those of you that have traded for a while. And you know that we've been kind of like in a stranglehold with volatility. It's been less exciting, let's put it that way. I believe that we're getting ready to go into salad days. Salad days are like the easy trading days where you just get in there and it just runs for you. It just really, really runs for you. And if you know what you're doing and you have to place yourself in the positions, you're going to very frequently find your take profit quickly ran to. And that is a very fun environment to trade in. It doesn't happen every year. It doesn't happen just because a Republican or a Democrat gets in office. It just means that there's a lot of things that have to take place to weigh out the impacts, if you will, the influences. And because Trump is a mover and a shaker, he's a doer. Okay, and I'm not going to try to prop him up because, like I said, I didn't vote for him. I didn't vote for anyone. I don't ever vote. I'm not a registered voter, period. But if I were going to be honest with you, if I was going to vote, I would have voted for Trump simply because I'm not voting for him. I don't care who he slept with, who he didn't sleep with. I don't care about his failed marriages. I don't care about his infidelity. I don't care about those things. I care about someone that cares about our country and cares about the people that live in it. And we have to live here, folks. And as someone that has a little bit more affluent lifestyle than most of you probably listening, I feel the pinch when I go to the grocery store because it offends me that it costs that much. It bothers me to see that this is artificially inflated and it was purposely done. All these things I talked about in 2019 and in 2020, it all came home to roost. Everybody feels it, not just here, everywhere. Everything, everywhere is expensive. And I told you that was going to be a catalyst to what they were doing March 2020. And here it is. So now we have a unique opportunity to see if this man is who he says he is, because we have the House, Senate, and the SCOTUS, and we have the White House. So when I say we, people that are interested in moving forward with the U.S. being strong, not intentionally weakened, made a mockery where men dress up like women and pretend to be leaders in our military. No, absolutely not. Absolutely not. And if that offends you, I don't care. Unfollow me. But the point is this. We have a unique opportunity to help the mentally ill, position people in the right seats because they're qualified to do so. All of this, equal opportunity because, you're a different sex, a different way of lifestyle. That's nonsense. Anytime I hired an employee, anytime, I was looking for the best qualified person. If that person was born one sex or another, it doesn't matter. I want someone that's going to be strong. And moving forward, we have that now going forward. Boeing just dropped their entire division of DIE or DEI or whatever. And that was a wonderful thing to see, because you may live a alternative lifestyle, and that's your choice. You're absolutely entitled to do that. You have that free will to do that. But you don't have the free right to force it down everybody else's throats. And we don't have to join you in your delusion. And companies and corporations should not be forced into a position where they have to hire because they're going to get canceled. If you ran a company and I came in there, or someone else came in there and said, you need to do this and you need to do that, and it flew in the face of everything that you stood for, but it was forced upon you to do that, how would you feel about it? You wouldn't feel good about it. Nobody would. And that's what we've been under. We've been under this tyrannical pressure to see things through a lens that's absolutely delusional. And it's wonderful to see the opportunity for people to go back to what matters most. Are you qualified to do the job? Are you qualified to be in that position? Because Kamala wasn't. I wasn't certain that Trump was in 2016. I was optimistic because I wanted to see how it was going to pan out. And he ran it like a company. And that's exactly how this nation and every country should be ran. But it shouldn't be a huge government. We need a smaller government. We need to reduce it. And the people that are representatives that think that they're lords and we're serfs, that's what they've been trying to work towards. And I don't look at these senators as leaders. They're supposed to be representatives. They work for us. They're supposed to represent us and our expectations and desires to see our country flourish and allow the opportunities for free people, because that's what we are here in the United States. We're free people. And they've been casting this illusion over you that you're not. You can't do this. You can't do that. You can't go to your funeral. You can't go to the hospital and see your sick folks. You have to put this in your body. My choice. My body, my choice. Where was that thought process when we had COVID mandates pressed on us? You need to wake up, folks. And now we have a unique opportunity to make the right direction in the path before us. Chase that. It doesn't matter who that person is. What's the ideology behind it? Because if it's making the nation stronger and it's affording you opportunities and it's affording the companies that you work for right now while you're learning how to trade, because you want those benefits, you want that higher pay, you need that right now. You have everything to pay for it. It's extremely expensive. You're not going to quickly run out there because you watch ICT videos and quit your job. You're not going to be joining somebody else's mentorship in 2025. They're going to promise you the world. But pay me monthly. Pay me monthly. And that's a problem. Because I don't need to do that anymore. I could make millions every single month, all over again. All I got to do is put a PayPal link up there. Here it is. Here, send money here. And you'll all be piling money into it again. I don't need to do that. Because I don't need to do that, I can give you the best education walking forward with you looking over my shoulder and feel confident that it's going to outperform everybody else's would-be mentorship in 2025. I'm going to lay an open challenge out to everyone that's going to be starting their first year mentorships or the ones that have been doing it for a while. Let's see who has the most profitable students at the end of 2025. Because what I'm bringing in 2025 is absolutely university level. Absolutely. The Dean of Glean is absolutely in session in February 10th, 2025. My YouTube channel will become a university. We're going to be covering commodities. Futures will still be, the main staple because that's what I'm actively trading now. But I will be bringing back in Forex. So every single day, you're going to know what the Forex market and or the futures market holds for opportunity through my eyes. At the end of the week on Friday, and I'll have a more refined schedule, probably the 1st of January. So the very first day of 2025, I'll post on my YouTube channel in the comment section, or community section rather. And it'll probably end up being in a video too, because I want to make sure everybody understands what I'm going to be doing, what schedule I'm going to follow. So that way, if you're interested in commodities, Fridays at the end of the trading for the week, I'm going to go over all the majors in the commodity markets. That means every metal. That means every agricultural market, bonds. I'm going to cover gold, silver, copper, platinum, palladium, even oats, lean hogs, live cattle, feeder cattle. I'm going to cover soybeans, wheat, corn, and oil. I'll cover all the energy markets. So I'm going to go back through everything I did back when I was doing mentorship in 2016, 2017. What my students actually had the privilege to go through was how to start looking at price. Well, we have already done that. You all know how to do that now. So what I'm actually going to do is I'm actually going to be doing my own analysis and sharing where I'm calling the market. And I'm going to pull you off of these 1-minute charts, because a lot of the things that you're struggling with is because you don't understand the higher time frame charts. And because I've spent such a long time working and teaching through 1-minute charts, 15-minute charts, 5-minute charts, you understand what you should be seeing on those lower time frames. The missing piece is you haven't spent enough time on the monthly, weekly, and the daily to afford yourself the luxuries of knowing what a higher time frame bias and draw on liquidity is on those time frames. And go back to what I started this Twitter space with, or X space rather. In 2025, the market should loosen up. That means you're going to start seeing sustained trends, and they're going to move around a lot. And that is going to be wonderful for all asset classes, even crypto, even though I think Bitcoin's going to go to zero eventually. And yes, I went there again. I would never buy Bitcoin. I think it's a trap. I think it's an absolute mind scramble, and a lot of people are going to get hurt with it. So I hope I'm wrong. I want to be laughed at by people that made millions and millions and millions of dollars with it. It would make me very, very happy to be wrong and you've made money if you do that. I'm just suggesting to you, because I get asked all the time. I see people pretending to be me online talking about I give signals in crypto. I would never trade crypto, ever. Not one thing in crypto. Why? Because it's the beast system that's talked about in Revelation. That's why I'll never touch it. We're not going into the discussions of the Bible, but that's the reason why I won't touch it. Okay? So that way you know plainly, it's simple, right to the point. I will never, ever, ever trade a cryptocurrency, ever. So once a week, I'll do a full breakdown. And it'll kind of like be a weekly review on commodities. It'll be on a Friday evening. It'll be a pre-recorded video, so that way it allows me to get right to the point. I edit out all the little stuff I usually end up talking about when I'm doing it live. All the things that you don't want me to talk about. Since it's going to be primarily focused on commodities, it'll be recorded. That way it allows me to go through each time frame where I believe the market's going to go and why it should go there. Okay. Because we're going to talk about commodity markets, there really is a supply and demand factor in those markets because it's the world's grocery store. They are real markets, okay? They're real. They have a real value, and that real value has a supply and demand aspect to it that no other market has. There's really no incentive or reason to buy a share of any stock. There's no real reason to buy a NASDAQ contract. There's really no reason to buy a S&P contract or sell short the Dow. It's an illusion based on the illusions of individual stocks. But a amount of gold or a a bushel of wheat or soybeans, if you're on an island, and I'm going to borrow an analogy that Larry Williams used, if you're stuck on an island and you don't have anything, and someone offers you gold or a bushel of wheat, what are you going to go with? You're going to go with the wheat. You can't eat the gold. So the grocery store of the world is the commodity market, and they have real supply and demand factors. So we'll be able to track any mega trades that form in 2025, and I think we're going to have some amazing mega trades in 2025. I'll break down the monthly, weekly, and daily with you on a week-by-week basis, and intermittently throughout the week. If anything changes or things become more in line with what I give in a higher time frame review on Friday for commodities, I will ring that inside the daily reviews. My plan is I kind of like want to have segmented videos and or streams, and I don't want to promise streams for everything. If I can overcome the technical things I'm going through with my YouTube channel, for whatever reason, they're messing with the audio no matter what I do. They're doing something with it all the time, and that's not my issue on my end. I went through several things to correct it. I spent a lot of money with different equipment and different computers, and it's not me. So something's going on in the transition from my ISP sending the stream to their servers, or they're getting it and it's just simply being mishandled there. So that's why I haven't been streaming. But the one way or the other, if I have to create another YouTube channel to compensate for that, I will. That's not a big deal. But I know a lot of you don't want to have anything to do with commodities. So I'm not going to force you to watch a video to find to a specific segment of that video where I finally talk about the asset class that you're interested in. By far and large, the majority of you are following me because of Forex. And a lot of you have been upset because I haven't been active in Forex. And I've explained to you why. Because Trump is going into office, a lot of the world leaders are now happy that they can have someone they can have a conversation with. And he may be stern on a lot of things in their eyes, but they know if he says that they're going to have a trade deal, they're going to have a trade deal. They're not going to be talking to a mannequin. So because of that global trade infusion of volatility, everybody now is getting prepared to start doing global trade again with the U.S. and all these different types of deals. We're going to be selling oil, which is what we should have been doing all along, and that's going to be great for our economy. It's going to be great for your job. If you have a job, it's good for the economy. If the economy kept going in the way it was going under the present administration, your job is not promised to you. And because you're financially illiterate, you don't see that. But that's a business owner has to make a profit. They have to make a profit. Just because what you make as an annual or an hourly salary or weekly salary, an employer has not just to pay that, but it has to pay it twice. You don't even realize that. You just give me a good job, pay me a good salary. But you don't realize that employers have to pay twice that. They have to pay for unemployment. They have to pay all these other things in addition to what you're paid hourly. And if you start making it harder for employers and companies and corporations, they're not inclined to want to keep people that they could trim back on overhead. And that means that you might have been made redundant or would have been made redundant. So while you're working towards growing and knowing how to do this independently and being consistently profitable, it's very important that your mindset is correct. Don't be caught up in this crazy leftist view on the whole economic landscape is going to fall apart because Trump went in there. 4 years ago, we had the economy firing on all cylinders, and Obama had absolutely nothing to do with that, zero to do with it. All the policies were shifted away from that garbage, and we started running like a corporation. And that's why everything was becoming smoother. And then when Trump was out of office, what happened? Train wreck. Okay? Train wreck. And I can talk just like this because I didn't vote for either party. But I'm a realist. I can see with a business background. I ran business. I own businesses. Okay? I know how this works. Okay? So if you're a person that's always been an employee or you're a university student and you've been indoctrinated, admittedly like my own daughter, okay, they have been forced to see things through a very skewed perspective. And it's unfortunate because you're being taught and spoken to see things rear end backwards. And you get told this over and over and over again, and eventually you start to believe it. And that's what's going on right now. And hopefully, as Trump starts to run our country like a business again, we will get things back in line, and everybody's pocketbook and wallet will be pleased because of it. And I'm all for corporate tax breaks because that's how you keep your job. Corporations have to be profitable. Period. Nobody goes into business to be a charity. They go into business to be profitable. And if they can hire the best qualified people, that's the most appropriate thing. You, as a developing student, you're trying to do what? You're trying to be the most qualified trader to trade your own money. If you're not doing that, you're not doing things correctly. You haven't made a business plan to plan for that. Are you willing to go out there and say, hey, listen, Mr. Blue-haired person, Mr. Nose Ring, okay, Mr. different kind of pronoun, you want to trade my money? I'm going to give you the equal opportunity. Here is my $100,000 account. You deserve a chance. Trade my money. You deserve it. Are you going to feel comfortable doing that? Because if you're not comfortable doing that, stop talking the nonsense that you see other people on the internet right now forcing down other people's throats. Oh, you have to do this. You should do this. Or you're a bigot. You're a racist. You're this. You're that. No, you're not. It's nonsense. Nobody in their right mind would do those things. But now contrast that with someone that says, hey, I have 20 years of trading history, and I don't have any more than 3 or 4 losing months on average, but I come out profitable with anywhere between 15 to 30% a year return. Who's getting that opportunity with your money? Huh? Skittle hair or the person that has a real track record that's more qualified? So a lot of you that are trying to train and learn from me, you want to go out there into the world and be a fund manager. What are you going to bring to the table? Are you going to bring, you owe me an opportunity? Or here's my track record, here's what I've been able to accomplish, and I don't take big risks. That's kind of like where we're going to be going in 2025. It's about the quality of setup, not the quantity of setup. It's not the frequency of trade. It's not the small time frame for purposes of being able to showcase to the world that you can find multiple setups in the morning or in the afternoon or in the London session. You're looking for the most opportune times to trade. And that means you might be trading on an hourly chart. That means you might be trading on a 4-hour chart. That means you might be trading on the daily chart and nothing underneath it. There's lots of opportunities like that. And my son, because I force him to make his own money, I force him to go to work to earn his money because it's giving him the gas, the steam, the energy, the motivation to want to learn how to do this because dad's not going to give it to him. And because that may not be what you would expect, you would probably think, well, I would hate you if you were my dad. Good. That's the same kind of steam that he's going to need. If he got mad at me and said, Dad, I don't respect you because you didn't give me money. My oldest son did that. There for a number of years, we didn't talk because I would not give him more money because he didn't do what he should have done with it when I gave it to him. And Caleb, being the second oldest, learned from that. He said, I'm not going to do that. If I have to earn it, Dad, that's what I'm going to do. And I'm proud of that. I'm proud to see that. And once he takes the initiative of going through that process of, man, it sucks. I want it faster, but I have to submit to this. I have to submit to this process. He will understand how all these markets work together, just like my private mentorships. They were connecting all the markets together. And if you understand, not that you need it, you don't need to know what bonds are doing to trade Forex. You don't need that. It helps a lot. But why have I not been talking about bonds? Because we have an administration here that was playing funny money games. Bonds were not doing what they're supposed to be doing. So why should I refer to them? You're not going to get the pure data that you would get in other times. So you go right back to price only. What is price telling me? Don't look at other supporting studies with the interest rates because the interest rates are being manipulated. So go back to the individual price of the instrument you're trading. And where's your setup going to form? Around time. because the markets run algorithmically. Commodities have a supply and demand factor associated with them that no other asset class has. Zero. There's no reason to buy Bitcoin. There's no reason to trade or buy any of these meme coins or all this other stuff that comes out. There's no reason to buy any stock or any individual option. That's speculation. There's no real supply and demand factors there. It's greed and fear. Those are the very aspects and two pillars that cause people to lose money. In commodities, you have a built-in advantage. You have supply and demand factors. You have a way of measuring the real interest in big smart money, the large consumers of a commodity. If they're net long on that commodity and they've been building that position for a number of months, and every time it drops and goes lower, they start building that position larger again. They're telling you you don't need a moving average that's going to go higher. They're telling you that you don't need a trend line that's sloping up that's going to go higher. You don't need it to go oversold. You don't need it to create bullish divergences. You simply need to know that this market is predisposed to go higher. And if there's a backwardization between the contract's month delivery price, meaning if it trades in March and it trades in June, if March's contract is trading at a higher price than June's contract, and June's trading at a higher price than September's contract in the future, that means that there's this backwardization of the normal carrying charge market. That means that you are in a commercial bull market. That means the market is likely, once it starts going higher, it will start spooling aggressively vertical, kind of like what cocoa did this year. Cocoa smoked everything. Like that market just was like brilliant, beautiful. Every year, there's 2 or 3 markets like that in the commodity market. Every single year, it does that. And for folks that understand options, and guess what? We're finally going to talk about options. You can parlay a very, very small account into hundreds of thousands of dollars in a move like that. And I have seen people do this and never trade again. One time, one trade, one market, they just stalk it. And those 2 markets were silver and coffee. And they never did anything else ever again. They didn't day trade. They didn't do any kind of other type of trading. They didn't trade that market ever again. They just waited and waited and waited. And when all the things came together, they moved their money into options. And they bought those call options and there it was. It was done. I mean, if you live your life simply, and you don't go out there and try to impress everybody, you don't go out there and try to live above your means, if you can make a couple $1 million and you live modestly, you're comfortable for the rest of your life. That doesn't mean you're rich. It just means you're comfortable. And honestly, so many of you are trying to take exorbitant risks, gambling on momentum, chasing price, but calling it a model, calling it a methodology, when it's really just chasing price. You know, if your idea is, okay, it's moving up, let me get in here and buy it, because if I can get a couple handles out of it, yeah, I'm winning. Nobody's doing it like this. That's not really sustainable, okay? That's what I was doing in the beginning. I was doing it in 1993, and eventually that stops working. And we're getting ready to go into a market where if you don't know how to trade, your hinder parts are going to be handed to you. But the good news is, the wonderful news is, if you do know how to trade, we have years, not just in 2025, we have years, at the very minimum 2 years, because there's a Senate election every 2 years in the United States. So for the next 2 years, in 2025 and 2026, we should have solid days trading. That means this is the stuff you've been waiting for as a trader that's been trading for a while. The environment is conducive for absolute millionaire making. Very, very, very good trading. And that has my juices flowing. Like, I'm hopped up on goofballs. I know the opportunities that are coming. I know that. I've been doing this for 32 plus years, and I am absolutely stoked to see what I know is coming down the pike. That is opportunity that you have been strangled. You've been stifled as a trader. We've not had the volatility that is supportive for the types of moves that really make easy trading. These markets have been very, very difficult in recent years. And I've made very, very open comments several times to my private students. I said it to them, and I've said it candidly out in YouTube and or in Twitter spaces like this, or X spaces. And it doesn't mean it's impossible to trade, but if you've had difficulty finding footing, say you've been trading for a little while, and you're like, man, this market sucks. Trust me, 3 decades rather of experience, I have seen good years and I've seen some bad years. And we have seen artificial manipulation in the market so much. It's disgusting. And hopefully we will start moving away from that. And you got to give a little bit of time. It doesn't mean the entirety of 2025. It doesn't mean half of 2025. But I usually take a break from trading the week right before Thanksgiving. And I don't trade until the first or second Tuesday of February of the new year. That means I allow January to trade without me. I allow the first week of February to trade without me. I don't trade December because I want to be focused on the holidays and family. I don't trade Thanksgiving week or after it going into the end of November because I got burned by FXCM trading around Thanksgiving. So that was the final lesson for me. I said, that's it. I'm done. I'm just going to take this completely out of there, and I'm going to let the holidays be my holidays. I'm not going to trade around it, just like I don't trade on vacations anymore. I used to take vacations and I would trade, and sometimes I would do very, very well. And any small loss would mess up my whole entire vacation. I would be like, why did I even do this? And it may not be big of a loss, and it would just poison the entire experience of being away. I'm supposed to be away. So if you take a vacation, take a vacation. But in 2025, I'm going to be showing you the best of the best. And it's all for free. There's absolutely no obligation on your part at all. You're not going to pay me anything. You don't have to do anything. You don't have to watch my videos. Okay? I don't care how many viewers watch it. I'm not putting the thumbs up there because that's not what I'm looking for. I don't care about that. I want people to take advantage of the opportunities that's going to be laid out in front of everyone over the next 2 years. And I'm going to share my real-time analysis, just like I did with my private mentorship. They experienced this on a day-by-day basis. They watched me explain where the daily and the weekly chart was going to go to, why it was going to happen, and I was in a high 90% accuracy. And you're going to experience that. You're going to see it. You're going to be a part of it. You're going to be just like you're in a private mentorship. You're going to be just like a charter member. You're going to be sitting right there looking over my shoulder, listening to me explain. This is why. This is it. This is not. This is why it shouldn't. This is why it should. And this is what I expect to see happening. So there is no ambiguity. I'm going to show you what will likely occur. And if I'm wrong, this is what's going to happen. But there'll be times where if I see something that may unfold and it doesn't pan out, and I give you the reasons why it won't pan out, I'll tell you when I'm going to reverse based on that idea. You never get that from anybody else. I will tell you everything. I'm going to tell you everything. And I'm not showing demo accounts next year. Okay? I have real money accounts. Any example I share is going to be real money examples. Okay? You've seen enough of that. You've seen enough of that with the market replay guys. You've seen enough of that with the delayed data, live streams, all that stuff. It's time for tomfoolery and fakes to step out of the way and let the man come through. You're going to see what it's really like to be trained by a world-class educator and trader. It's going to happen, and it's going to happen for free. I promise you, I guarantee you that no one's going to be able to keep up with what I'm bringing in 2025. No one's going to produce as much profitable students at the end of the year than I am. And you're all welcome to bring the receipts because I'm encouraging you all to do that. It's going to happen. You're going to have a whole lot of fun. All the shenanigans is done. I had a lot of fun on Twitter this year, but I'm showing you something that you never would experience otherwise. Your job is to determine what you want to do. Do you want to specialize in futures? Then don't worry about what I'm doing in commodities. Don't worry about the Forex. If you've left Forex and went to futures and you found that it's a more gentlemanly market, it means it's more precise. You don't see a lot of the tomfoolery that you see in Forex. And everybody's price is the same price. In Forex, it's not the case. So if you've been upset because your love is in Forex and you've not been able to find your footing in there, welcome home. Because in 2025, Daddy's coming back. I'm bringing back all the I'm bringing sexy back to Forex. Let's put it like that. Okay. Every mentor out there that's educating, I promise you, sales are going to suffer in 2025. Okay. It's nothing personal. It's just I'm the best and I'm going to prove it. I'm going to create a legion of profitable students. I'm going to create an army, a testimonial army of this is the market. This is how you should be trading. This is how you should think about it. There's no lifestyle stuff here. There's no vlogging stuff here. It's just we're coming together like a board meeting. Here's the data. Here's our KPIs. What are we doing with this information? What direction are we making? What's the investment that ICT is making with this real money? You can't get any better than that. Because if I'm not willing to put my money behind it, it ain't worth taking. If it ain't worth taking like that, then why should I talk about it? Sorry, but not sorry. It's time for the talkers to stop talking. If you have something of value, you'll produce it and share it too. And you'll have people come behind you and say, wow, you know what? This made me who I am today. Great. I'm all for it. If it makes you better, makes you profitable, well done. But if you're teaching with market replay, or they're teaching in hindsight, this is what I would have done if I did it, or if they tell you, I took a trade, I think I entered in here. If they don't show you, they didn't do it. They didn't do it. If they're teaching through Trust Me Bro Incorporated old tactics of here's my screenshot of my MT4, MT5, here's my profits, forget about it. If you are the guys that believe $100 will turn into $1 million with white label fake Forex brokers, you're going to be shocked to see how you can really make money and not believe that BS, because that stuff doesn't happen. It did not happen. And you're welcome to let me pay for a third-party audit and prove that you didn't take $100 to $1 million, Alex. So you're going to see all kinds of wonderful real-world analysis concepts. No extra PD arrays required. My whole approach is going to be how you, and there'll be videos in January that are pre-recorded educational videos that's going to help you use the information that I'm giving that's going to be purely just analysis. I'm not teaching, okay? I'm not teaching in 2025. I've already taught. There's no new wheel being reinvented, but in January, I'm going to give you lessons. There'll be 20 videos in January. It'll be Monday through Friday delivery, and it'll help you. If you don't know what to do with all that stuff on my YouTube channel, those are the videos that's going to finally just address it. Say, okay, if you want to be trading Forex, this is what you should do using the videos, how to approach it. And once you watch them, what should you do next? Okay. I'm not writing a book. Okay. I thought about it. It's aggravating dealing with these guys that are publishers. I'm not going to do it. So what I was going to put in a book format, I'm literally doing it over the course of 2025, because it's better to simply watch me do it. Because you're not going to appreciate anything I type out. And I've looked at these rough drafts, okay, and I'm looking at them like, I know what this means, but I know that it's not going to deliver, because most of you don't even do the work of back testing and looking for the things I tell you to look at. There's a lot of videos on my YouTube channel. I have dozens of books written in video format. Like, they're better than audiobooks. They're literally the best thing you can find in terms of understanding what algorithmic price delivery is like, understanding what time delivery is, understanding the mechanics of precision entries and exits, understanding the real market structure, not just simply higher high, higher low. That's garbage. There's things that you simply cannot get communicated effectively in a book. And my obsessive compulsive disorder just won't allow me to be satisfied, because they want me to trim back some of the things. They're like, well, this could be reduced in size. No, it ain't. I don't want that. So to save myself a lot of the aggravation and save the whole community a lot of time waiting for the few people that would buy it, photocopy it, and then try to sell it for $10 on Telegram channels, you're not getting that money either, Jack. So I'm just going to simply go out there and just do it. I'm going to do it over all the asset classes. You're going to watch me outline it, just like I did with my students in unpaid mentorship. You're going to see everything I've always said is true. And you're going to see it in every asset class. Commodities, bonds, currency futures. You don't want to trade Forex anymore, or never traded Forex and never could muster the interest in trading Forex? Wonderful. You can trade the futures contract on currencies. I did. And you'll see me do it this year with real money. Real money, not a demo account. All real. There's nothing to hide. There's no reason to hide from it. The stuff works. And when you see that you have a plethora of opportunities in front of you, you can be a commodity trader. Maybe that's the asset class that you've never realized that was designed perfectly for you. Meaning that you're not going to trade every single day. You're going to look for setups that make perfect sense. You have real supply and demand factors behind why that move should take place. And you're using a higher time frame entry model. So you're not worried about the tiny little fluctuations intraday. You're not worried about kill zones and macros. They're not necessary. You're simply looking for high probability entries with sound risk management in markets that are predisposed to go higher or lower because of real supply and demand factors, real fundamental aspects. That only occurs and exists in commodities. So for the folks that have a lot of distrust in the mumbo jumbo that I say about algorithmic this and algorithmic that, the commodity markets have a real supply and demand pull and tug of war on price action. It's a unique asset class that has a lot less tomfoolery in it, even beyond the scope of futures trading in sense of index trading. Now, index trading, because I trade predominantly the NASDAQ, I will start bringing in ES once in a while because I know a lot of you like to trade the ES and you're like, can you show examples in ES? Well, if my focus is primarily on the NASDAQ at the time, I know sometimes I come across like a mental giant. I'm not. I'm not a genius. I'm not trying to portray the idea that I'm some savant. I'm a simple guy that's been blessed. And if I dilute my attention to too many things at one time, which is why we have to have a schedule. On Fridays, I'll deal with commodities. At the end of the week, telling you what I believe is going to happen for the coming week in trading. And then that'll afford me the opportunity to sprinkle throughout the week when things are salient to that idea that I gave on the previous week at the end of the week. So that way you have my expectations shared on Friday. So that way, anytime during the weekend when you're watching football games, whatever the sports, you do your house chores or whatever, and your wife or spouse allows you the time to watch that video, you'll have my perspective on the coming week with the grain markets, the metals markets, the energies market, the currency futures. Every facet to commodity trading, I'm going to cover that. There won't be any market that is not touched. Okay, I'm going to touch it all up. Okay, so daily, I will be an index trader with analysis, and you'll see that. With short-term trading, I will be doing that with either Forex or the currency futures. So short-term trading is going to be not day trading in Forex, not day trading in index futures, but futures, currency futures rather. Any setup that forms in Forex is going to be forming in currency futures. So you're going to see this overlap between both of them. So whether you want to be trading in the Forex market, which is cowboy Western, where everybody has a different price, everybody has a different high for GBP, USD, everybody has a different price for dollar CAD. Your brokers don't agree with the same highs. Your brokers don't agree with the same opening price. So there's tomfoolery there. There's a whole lot of room for you to get hurt. In currency futures, we all have the same high price. We all have the same low price. We have the same open and close. So it's a gentleman's approach to trading the same thing. You want to trade the British pound? Wonderful. Trade it through futures contracts. And don't trade with these garbage brokers, these unregulated offshore brokers that don't necessarily have your best interest in mind. In 2025, you're going to see the wheat and the chaff separated. You're going to see the sheep and the goat separated. Who's a real mentor? Who's really creating profitable students? Who knows what they're talking about? Because that's my motivation. I'm bringing you world-class analysis, not teaching. I'm not teaching. We're done teaching. I've taught everything. What I'm showing you is how to use what I've already taught. And there's not a whole lot of moving parts to it. In January, I'm going to show you how to pick your model, how to pick your index, your instrument, your asset class, how to pick your time frame for your type of model, how to pick and associate what your entry model should be, what PD array, how do you determine which PD array? Because I have a lot of them. How do you arrive at, on an individual basis, on a personal basis, how do you pick the right one? Because there's so many people that capitalize on the interest that new people or inexperienced or lazy students, and I say that lovingly, because it is a little intimidating when you come to my YouTube channel and see all that content. You're like, man, I just want to get started doing something. I don't have time to go through all those videos. Well, that's kind of like what I did in 2024. I showed you, this is the nuts and bolts. Get out there and start doing this. Every time I create a new, unique model, it's to prove to you that you don't need to watch all those videos right now in the beginning. You need to start somewhere, though. To have a well-rounded approach as a trader, watching every video on that YouTube channel is always a recommendation by me. I don't care if you download all my videos and watch them from your PC. I don't care about ad revenue. I don't care. But if I'm going to put the videos up on YouTube for everybody to have for free, why shouldn't I get paid ad revenue? The ad revenue is going to get collected by YouTube, so why shouldn't I get 60% of it? Either they're going to get all of it or they're going to get 40% of it. So I'm not in the business of letting these rich people take money on things they didn't earn. So it's my content. I own it. I own the rights to it. I'm Inner Circle Trader. I'm always going to be Inner Circle Trader. That is my content. So I don't care how you devour the content. If you want to download it, then watch it from your computer because you just simply don't want to see an ad revenue payment go to me, I don't care. I don't care. I don't care about that. I don't need that. Like I said, remind you, I could be doing this for money, and there's hundreds of thousands of you, they're all listening, will gladly pay whatever. All I have to do is sit down for 1 month. 1 month, let you in a room, watch me trade. That's all I don't have to teach you anything. Just let you see what I'm doing. And then say, now, you want to see this? It's $500 a month. Most of you won't do that. You'll look for the guys that are selling the alternative streams. Okay? Kind of like a scalper. They go out there and, hey, look, you want to get in here? I'll sell you a ticket over here. But they do it for the cheap. I'm removing, there's no need to go into anybody else's mentorship. And I'm going to get so much hate over this. I don't care. Because I'm tired of everybody using my name. I'm tired of everyone using my name to get attention drawn to you, and then you want to talk smack about me. That's low class marketing. You're going to have to earn it now because I'm going to give them so much gold. They're not even going to consider you. So you can flame me, you can praise me, you can do whatever you want. But if my name is in your title of your videos or your content, you are literally proving that you need that instead of just being an individual all in and of yourself. Stop trying to be an ICT clone. Stop trying to mimic me. You can't be me. You can't be like me. You're not going to be able to teach and showcase what I'm going to show in 2025. That's not going to happen. So all you're going to do is show by contrast, glaringly obvious that you can't measure up. And that's why I'm doing it. And it's for free. Why would they pay you? Why should you, listening, pay anybody else that doesn't know what I know about the content I created? That's nonsense. That's lunacy. It's lunacy. To do things like that makes no sense. And I understand people feel like they have to pay for something to get value, but I'm a person that lives affluently. I don't need you to pay for my $200 course. I don't need you to pay me monthly payments. I don't care if you watch my videos from my YouTube channel or not. I don't care. Download them. I don't care. I don't care how you get it. I don't care. Okay? But I'm not allowing people the easy access to market and make money off of my name. It's gotten way out of hand, and I've done strategic things this year to make it less enticing for people to want to do that. And because of what I'm going to show in 2025, you're going to learn how to look at the commodity markets. You're going to look at how I see the futures markets, index trading, currency futures, and Forex. Forex is back on the menu. Those are going to be short-term trading. I'm not trying to day trade Forex. I'm not trying to day trade currency futures. I want to be short-term trading. So that's like one-shot, one-kill setups. So I'm going to have pretty much everything that I've ever discussed and talked about. Long-term position trading is going to be like the commodity trading because I'm focusing on mega trades. Now there'll be swing trades in there that are usually held for like 2 weeks to a month and a half. Those will be talked about, and I'll give analysis on those types of setups too, because there's one or two of them a month, but it takes a lot of time to wait for those things to form. And I'll give you strategies on how to implement when those conditions are met. So it'll show you how to use everything I've already taught, but apply it to real analysis in markets where you can choose. Which one do you see? And maybe in 2025, you will have an epiphany about what you should be doing as a trader, because I'm going to cover all aspects of trading: position trading, swing trading, short-term trading, day trading. And I'm doing every asset class. No crypto. I will never, ever, ever trade crypto. And people that keep asking me that, stop asking me. If you see people trying to use my name in my logos or my face and whatever, and they say, I just opened up a Telegram channel, or I'll be teaching you new concepts. I'm not teaching new concepts. I'm not done. I'm done teaching. It's the doing now. Okay. You all know my language. You understand how I talk and how I refer to certain things. Now, when I sit over top of a chart and I say, this is where I believe the market's going to go here, and I don't believe it should do this, and then I'm going to tell you how I would engage that market, how I'm going to do it. It is not a signal service. It is not for you to copy me trading. It's none of that stuff. It's for you to make a sound, logical decision based on money behind real trades. If I'm showcasing something, I'm taking money and placing it behind these ideas. I am not talking in speculation. I'm not giving a hypothetical. I want to showcase this is what I would put money behind. It is not meant to inspire you to copy me. If you do that next year, you're wasting the opportunity that's being given to you. Because if you introduce money to it, you're going to be worried about whether or not I'm going to be right or wrong, and not understanding what it's like to watch price in that move. Now contrast that with, you struggle many times to get into a trade that may be on a 1-minute chart, and you put the trade on and it starts fluttering around and it moves in your favor or it doesn't move in your favor. Immediately you are emotionally hooked. Now every fluctuation means something to you, but it's grossly exaggerated and it's going to be clouding your mind. You're spending more time hoping that it moves in your favor and fearing that it won't, to notice the things that it's indicating that it is or isn't a sound trade anymore. You're worried about the micro fluctuations. If you have that tendency, and if you're trying to copy me next year with real money, simply because I'm telling you I'm going to be doing something with this idea, when I'm talking about short-term trading or a swing trade in a commodity market, you're going to lose your mind, because I'm not going to talk about that thing every single day. It'll be a position that once I put it on, I place a stop, I let it go. And if you copy that, any little fluctuation in price action while you're in that same trade, you're going to be so anxious and scared. And you're going to be going to my Twitter and saying, hey, or X account, sorry. Hey, ICT, can you give me an update on this? Should I move on? I'm not going to answer you. I'm not going to answer you, not because I want to be rude or ignorant to you, but I'm reminding you, I'm not going to babysit your trade. I'm not going to do that. But if you want to see a world-class analyst trader in action, that's what 2025 is going to come. That's what I'm doing next year. And there ain't nobody out there. There ain't nobody out there anywhere. You can bring them all here. You can inspire them to do the same thing. Okay? Instead of asking me to come on your podcast, okay, because I don't do interviews. I'm not a celebrity. I'm not going to act like a celebrity. And I'm not going to bring you attraction or traffic to your channel because you have me on your thing. If you have something of value, just produce it and share it to the community. That's all I'm doing. It's not about image. It's not about pomp. It's about, let's get down to business. Okay? We have wonderful opportunities in front of us. Wonderful opportunities laid before us coming over the next 2 years. And drama marketing and all the fun I've had this year on Twitter, I got to put that behind myself, okay? And I want my son to see how all these things come together. He tried the top step. He tried to do it and rushed. And because he was impulsive, He failed. Once he got funded, he blew it the very first trading day. It's easy to do that. And they're designed to do that. Okay. So he scratched up $5,000 and now he has that in an AMP global account. That's a real regulated broker. Instead of taking whatever the fees that he paid to do Top Step, instead of doing that and limiting yourself to whatever that amount of money they force on you, and as you make money that trails behind you, that's like a trailed stop loss that strangles your trade. Here's your maximum daily loss. Okay, if your maximum daily loss is whatever it is when you first started trading your combine or your funded account, then it should stay there. Never trail behind. That tells you that these companies that do that, and Mr. Patak, I understand this probably isn't going to be good for your marketing or whatever, and I don't care. It's not meant to be ill-spirited, but that's really disingenuous. Because if you initially offer the opportunity that this is the maximum loss when you start the combine or you get the funded account, it should stay right there and it should never trail higher. Because what this does, and for the people that don't know any better, people that know how to trade and have traded with real money understand that these prop firm companies are Ponzi schemes. Okay, I understand there's a lot of you don't have the resources to put $5,000 together to throw into a real trading account. But Caleb has real money, $5,000 in a real account. He doesn't have to worry about that maximum loss following him up as he makes new equity. He doesn't have to worry about, trading a number of days before he can get his money out. If he makes $250 today, tomorrow, sometime next week, he can take that $250 out and pay it towards his bills. He doesn't have to do 5 days in a row profitable while they're trailing that stop loss of blowing the account right behind wherever you just recently made money, demo money. It's a fool's errand to try to trade in those companies, all of them. And you just watched another one go belly up because they're frauds, they're scammers, and he's offering up a $500,000 the bet on me not doing something or doing something. Guys, these people are frauds, man. And you're trusting them with your financial future. You're paying these educators. They're supposed to be so good at doing what they're doing, but they're panhandling for money to support you or support themselves through sales of courses and mentorships and whatnot. It's really time. It's high time for people to stand where they're at and sit still and say, okay, why am I even doing this? Am I in here to be part of a community where people look up to me and they glad hand with me and say, wow, I want to be like you? Clout, image? Or are you here so that way you can afford a better living, make your ends meet? Because that's what I'm offering. And I'm not saying it costs you anything, but time. It's going to cost you time, and that's the most expensive commodity. That's more expensive than any amount of money placed on anybody and what they would charge. One-time payment, monthly payments, it matters not. Time is the most expensive commodity. And when I teach you with my time. My time is extremely expensive. I made a joke that, I was getting interviewed by Goldman Sachs. That was sarcasm. I was trying to be funny. I had a person email me and said, would you go to work for one of these large investment banks if they offered the opportunity to you? And I was like, no way. No way. I've had things laid in front of me in invitations for things, and I said no. I don't want to do those things because to work a job is slavery. I worked very, very hard and hurt myself financially and emotionally and psychologically in the beginning in the 90s, rushing to leave the rat race so I don't have to do those things. So my final contribution as an educator and teacher is simply doing. Just simply doing. No, trying to be funny or entertaining. We're sitting down. This is the market. This is what we're focusing on. This is the risks. This is what I'm willing to assume as risks. And this is what I'm not willing to assume. So there may be times where there's a market opportunity there, but the risk may not be applicable for what I'm inclined to take at that time. So you'll be able to watch it and observe it. But you'll also know when I'm actually in there with a real money type trade. I will be trading through TD Ameritrade for some markets. I will be trading with Forex.com with Forex. I will be trading with AMP Global for index futures. So there you go. I have no affiliation with any of them. I don't have any kickback. I don't tell you to trade with these companies. They all suck. How's that work for you? Okay. So there's no deal between me and anybody else. I'm not going to get a kickback. I'm not getting any kind of payments. I'm not getting kind of royalties. That's the companies I'm choosing to execute and clear my trades with in 2025. Okay. So that way you know that I am not trying to funnel you into any of these companies. I'm not an introducing broker. I would never be an introducing broker. That means that I'm acting as a person that would get you to open up an account with any individual broker. And then every time you take a trade, I would get some kind of little piece of that. Kind of like all of the influencers that trade through prop firms and they have an affiliate link. I have students that do this. Okay, so I'm not dumping on any of you. I'm just reminding folks that I don't do those things. So if I ever say anything about a company or a product, I genuinely either don't like them, and here's the reason why I don't like them, or I like them, and here's the reason why I like them, and they don't pay me anything. Okay, I have companies all the time reaching out to me and asking me to do some kind of affiliate marketing, some kind of like an advertisement type thing, and if they're honest, they'll come forward and say, yeah, this is true because I offered him and he wouldn't take it, and there it is. But I want my opinions to be genuine. They're organic. That means that they are genuinely my unadulterated opinions. So that means I'm not influenced by the paycheck at the end, because I can make lots and lots of money doing that. I have a lot of people following me, and I have a lot of influence over a lot of you. So if I say, I would only trade with this broker, I would only trade with this prop firm, I would only do this with this Forex trader, brokerage firm, a lot of you would only consider that because ICT said that this is the only one. And I understand that influence. And I never want to abuse that. I never will be accused of taking that and monetizing that for my own personal gain. To me, it would be very disingenuous. And I would love to find other people in the industry that are highly opinionated about certain things in the markets do those types of things. I would gravitate towards those individuals more than the people that have affiliate links, because they're incentivized to talk about that company. They're incentivized. And truth be told, a lot of them trade through other companies, but they just won't talk about them because, number one, they won't get financial gain. And two, they have a contractual obligation to only promote the things they have affiliate marketing through. So I don't do those types of things. I have zero to gain, nothing. I've already told you, download the videos. I'll make no ad revenue. How's that? That's business suicide. I don't need it. Don't you understand? I don't need it. But I love teaching and I love sharing. And I want you all to see what, after a number of years studying, what you should be focusing on and how a day in the life of a real trader, how does that happen? Like, I'm not going to pull up and show all kinds of cars and how I walk through my house from pajamas and make my coffee in the morning because I don't drink coffee. It causes dementia. Do some research, you'll find out. All these things that people do for attention, I live a very simple life. The markets consume a large part of my life, and it has been that way since I was 20. So when you all ask me to do like vlogs and show the world how I live and what I do every day. The markets consume my entire day. If I'm out and about, I'm on my phone checking the markets. If I'm inspired to share something to either encourage you or make you laugh or smile, because maybe the markets are being fickle. It's just, I know you're struggling. You're probably thinking, man, it sucks right now. I ain't doing anything. And I'll do something to be funny. Okay. And sometimes people take that stuff and they run with it and make a whole conspiracy theory around it. And to simply allow me to make a joke once in a while. Allow me to be sarcastic. Allow me to do those things, because I'm a human being. I'm not AI. And while my interest to always try to have an entertaining delivery, it's going to be very dry in 2025 because it's just business. I'm not in here doing any kind of shenanigans. It's just, this is what I'm looking at and I'm focusing. That's all it is. There's going to be very little talking. It's going to be me simply saying what matters, and that's it. So it's not going to be high entertainment value, but it's going to be real value in terms of what is ICT putting his money behind? Why is he doing it? Why am I focusing on this market? Why am I looking at soybeans and not wheat? Why am I looking at lean hogs and not live cattle? Why am I looking at high-grade copper instead of silver? Why am I trading the 30-year bond or the 10-year note? Why am I trading pound futures and not Canadian dollar? Why am I doing these things? Not just simply, here's the trade I took. Here's the dose. I'm going to dose you with reality. This is what a real trader does day by day. When the analysis is done, you're watching it being done. There's no extra stuff that on the side. This is all that is required when I make my decisions, and this is how I consider going into the marketplace. I'm going to teach you how orders are placed, how I choose what option that I trade, if I'm going to be trading a put option or a call option. I don't do all that complicated things like condors and straddles and strangles and calendar spreads. You can get nuts with options trading, and I tried to do all that stuff when I was in my mid-20s. Like, I got really hooked on the idea of options trading. And I will admit to you, while I'm very mathematically inclined, my specialties are science and math. I've been a nerd in those two categories ever since I was a little boy. But I will readily admit and concede that the markets that are optioned and how all these strategies and the Greeks and whatnot, you can really get a little stupid with it. Like, there are some extremely intelligent people out there that make consistent gains, and I would never be able to trade like them with options. And I have no shame in saying that. They are basically like phenomenons with it, and I've never been able to replicate the things that they've taught. I bought a lot of things in terms of courses and books and things. I've sat in individual sessions where it was trained, and I don't have any affinity for that level of complication. And to me, that is complicated trading. But there's not a lot of people doing that. There are some that are absolutely superheroes, like they're legends in terms of being able to make consistent profits, doing highly technical strategies with options. I just simply say, you know what? I just want to look at a market that I think is going to go up. And if I can get a cheap call option, I'll teach you how I determine what is a cheap option. It's not complicated. Um, an option, for the folks that don't know what that means, if you don't have a whole lot of money, if you don't have a whole lot of money to invest, you can trade options. And the strike price and the premium you pay for that option, if you think the market's going to go higher, obviously that you're most likely going to trade a call option. If you're just going to outright buy the option. A lot of people promote the idea, and it's true to some extent, that option writing is the most profitable, meaning that if you're the seller of options, you're selling premium. Meaning, a perfect example would be this. If I believe that high-grade copper is going to go up, and say it's going to go up, several hundred handles, okay? If I believe that, I have a couple things I can do. I can be an option writer and sell put options. And the premium that I would collect by someone else buying the option that I'm taking the other side of the trade with, by me selling put options, a put option is someone that expects the profit to be made when the investment instrument drops in value. So the appreciation in terms of profit is afforded to them when the price moves lower. And if they are bullish on the market and they buy a call option, when the market goes higher, they're making profit by that. Okay, so the easiest way to remember is call up, put down. Okay, call up, put down. And while there are times where I would be interested in, if I'm extremely bullish, I could sell puts, take that premium that I've collected, half of that, and contribute that to buying long calls. And I'm okay with that risk because I know that the technicals behind what I'm looking for in certain conditions is more conducive for my trade to be profitable versus the risk that's associated with selling the premium on the puts. So what I'm saying is, and if you're brand new and don't know anything about options, I just completely lost you, I know. And I apologize, it's not my intentions here. But when I trade options, what I like to do is simply go long calls, okay, if I'm bullish, or just simply go out and buy a put option if I'm bearish. And I choose strike prices and length of time, how far out in the future do I use. Um, I also have done weekly option trading where I was trading individual stocks and I would trade or OEX options, which is something you'll learn about that in January. I'll actually have one video that talks about OEX weekly options trades, where if you can just simply collect some price movement in the option market there, you don't have to have the margin to trade an S&P contract. You don't have to worry about trading prop firm accounts, because if you have a couple of $1,000, you can parlay that up to whatever you want it to be by the end of Christmas. But you have to be consistent. You have to know what you're doing. And 2025 is not how many trades can ICT show you. It's which ones is he really focusing on with his money. And that to me is a testimony far beyond just simply me proving that I can time the market and I can do all these things. There's a lot of people out there that love taking shots at me. I like it. It's fun. When they exchange with me and you guys get mad because I'll respond to them and you probably gave me a compliment and at the best I may heart it or something to that effect, but I generally don't respond to it because I get too much of that. And I'm not saying I don't appreciate it. It just means that I know what I'm doing is appreciated, because the fact that you're watching me and listening to my content, that's enough. That's okay. But I love the sporting aspect of people talking crap about me. Like, I love that. And what you don't realize is that motivates me. Like, I love twisting the knife. I love finding new ways to show them they're wrong and that you're following the right person. You might not agree with the way I do it, but you have to understand that this is what makes my personality tick. It gives me the fuel to keep being ICT. It gives me the fuel because I'm bored otherwise. If everybody just says what you all collectively do all the time is, I appreciate it. I thank you for doing this. Yeah, it's great. I got it. Okay. I thank you. It's good. Wonderful. But it's just like, it sounds gratuitous at a time. And it sounds like I don't appreciate it. But the truth is, if you wake up every single day and 99% of the things that are sent to you in email or left in comments are, you're the god of trading, which I'm not. You're the best. You're the GOAT. You're this. It's like, come on, man. It's a diabetic coma. So I like to look for the salty people, because like anything else, you eat a candy bar, sometimes you need a drink of water and then something salty to kind of counteract it. So I use social media to help that. So I don't mind when people take shots at me. It's very good. It's a good thing for me. As an educator, it gives me fuel to keep going. Because if everybody just says all the time, this is the greatest thing in the world, it's like, you know what? I've already had people say that enough. I want people to challenge me. I want people to say, you know what? I don't believe that this could be done. I don't believe that you really did that trade. I don't believe that this was ever done with real money. I believe it's only demo. I like that because they provide me perfect little stages where I can say, okay, I'm going to schedule a rebuttal to that with this, and I'm going to do this with that. And it's just a way for me to engage with everyone. A lot of people that pretend to hate me don't really hate me. They just like to be able to take shots because they understand that it's fun. Some of them believe they get under my skin. It doesn't happen really. I like that to occur. I want that. And some of you that are trying to defend me, thinking that you're protecting me, you're not protecting me. I'm inspiring these people to say these things. If you really watch what I'm doing on X or Twitter in the past, I do these things to be inflammatory. I want these reactions. I want it. And I'm not monetized, so it's not because I'm making money. It's because I want them to give me new ideas, because I may go through a rut as an educator. I might think, I have a dozen different things I want to start with next. And because I can't decide on where I want to go with it next, I'll just toss something out there in the ether on the internet. And the first person that brings something negative about it, it usually will cause me to say, okay, here, I'm going to go that route, and I'll use this as a catalyst to teach something in rebuttal to that. So that's the rhyme and reason why ICT does what he does on social media. That's why I do it. And we're not going to see that in 2025. Just understand that. And for some of you, that's probably a welcome change. You're like, well, great. That's what I wanted to see all the time. But it doesn't mean I'm going to leave X. I'm not leaving X. X is going to be there for my playground. But the things I'm producing for 2025, there isn't going to be all the, shenanigans that I like to do all the time. It's just because I'm working with real money. I'm working with real money. I'm working on showcasing after learning everything on the YouTube channel and finally settling on whatever it is that you're going to settle in, whether you're going to be a future trader, a Forex trader, now commodity trader, what is it you're going to be focusing on? And what would it look like for you if you were a short-term trader? How many trades does ICT really try to take over the course of a week if he's short-term trading? I'm going to show you. Because if I say it, I've said it dozens of times over the years, and it's like, I have so many responses and posts and videos. I've said these things before, but the questions usually pop up in redundant fashion where it's like I'm tired of answering it. So this way you actually see me dealing with real money. And there's no better way of answering those questions. So that's my plans for 2025. What would derail that? Well, if the Lord takes me home, obviously, I can't be here for that, could I? But if something happens like Trump not making it physically into office on the 20th of January, and I'm not wishing any of that to happen, but that would be a little bit more problematic. That would take us back to what we've been seeing for the last 4 years, where it's just really crummy price action, a lot of just weird, spiky type, high resistance liquidity run conditions, and a lot of it. And I will still make a go of 2025 the same way, regardless if he makes it there or not. But what I'm suggesting to you is that 2025 and 2026 are going to be banner years for people that know how to trade. They're going to be really, really good trading years because of the Trump effect, because he's bringing back to the forefront of everybody's mind that our nation is a corporation. It needs to be ran like one, and it needs to be responsible with the money that it spends, and it needs to be efficient, and it needs to remove the stones in its path. You can't travel efficiently and at a proper speed down a road that has lots of rocks and boulders in it. You have to clear that stuff out. And Trump's presence in the White House, while inflammatory to a lot of people, because they're ignorant, they have no idea. They think that the world's going to end for them. They think that women's rights are being stolen from them. They're not. Okay. If you want to go out there and murder babies, it's still available to you. Okay. You want to do those types of things, it's available to you. It's sick. It's disgusting. And that was where I was going to, that was my outcome. That's what my mother was going to do with me. That's what I was expected to have happen to me. And I had no way to stop that. I couldn't stop my mom from wanting to do that, but my father did. Not in the right way, but he did. He stopped her. So the people that are saying that women's rights are being stolen from them or kept from them, that's not true. And show me the facts where as counter to what I just said, because it's disgusting to see people on social media and in the news bloviate about these things that are not true. Stop looking at this one person and thinking that this person is hindering your personal life or holding your health choices back, because it's not. You know who was doing that? Obama. Obama was doing that, where they said that we had to pay for Obamacare. If you didn't pay for it, you're going to be taxed. And you had to do these types of things. You had to get a physical, or you had to pay more. Come on, man. That's stuff that, it's my body, my choice. But you're going to be selective about it. In trading, use that same discernment. Your money, your choice. Who are you going to believe? Who are you going to believe? The course sellers out there that are rubbing your nose in the stuff that they put out there, that fecal matter, and you're paying for it. They're playing songs in their little promos. I get paid by stupid people. They're telling you who they are, and they're showcasing what they are. And they need your money. If your money stops, they can't live the way they live. And nobody's been sending me any money. Nobody's been sending me any money. and I still keep coming. I'm better than an Energizer battery. I keep going and going and going, and I don't ever run out of energy. When the Lord says, you're done, son, come home, that's when ICT stops teaching and showcasing and being a part of the trading community. That's when ICT stops. That's when I stop. But I have an obligation. I made a deal. He did his part. I have to keep mine. And I don't know any other better way of doing it than simply sitting down like I did when people were paying me. This is what I'm looking at. This is what I believe is going to happen. This is what I think the market's going to do. And these are the types of scenarios that may come to fruition, and study and watch price action. When it does these things, then it should behave like this. And you have a free pass to watch and see if I'm right or wrong. And I will have receipts showing you, this is what I lost. This is what I made. This is where I was right. This is where I was wrong. This is where I pyramided. This is when I didn't pyramid. This is where I took some of the trade off. And this is where I let the trade go to profit or collapsed it. You'll see all that stuff with real money accounts. I don't need to do these things. I don't need to do it. No one's asked me to do this. It just came on a whim this morning. It just came by inspiration, by a little boy talking in another country that can't be what he sees me as. And people look at me and they think, you have all this influence and you're a clown and you just do all these things. You don't keep your word. You don't keep your promise. I've already delivered all that stuff. I delivered all that stuff. But you want to see one thing and you ignore everything else. And that to me is astonishing. But next year, you're all going to choke on it. You're all going to choke on it because no one asked me to do what I'm about to do. But I'm going to show you how everybody else ain't nowhere close. And you need to stop paying these people. Everything you'd ever want to learn about trading is accessible on the internet for free. All you have to do is look for it. A lot of it's going to be found on my YouTube channel. And I've already reminded you, you don't need to watch my videos on my YouTube channel where it's monetized. Just simply download them. How is that? You'll never hear other YouTubers say that. Download my videos so that way I don't get ad revenue. Like, how many things do I have to prove to you that I'm not monetized by doing any of these things? I have to try to get something instead of letting YouTube Corporation, Google, collect all the ad revenue off of my videos. They didn't do the work. They didn't put the time in making those things. I did. So why is it fair for them, for me to post them and use them as a hosting service? Otherwise, I have to pay for a server, which is expensive. Why should I take that cost and incur it individually just so I can give it to you for free? No way. I'll put it up on YouTube and I'll cancel two things. I got money when my daughter does things foolishly and doesn't manage her money right. So I have a way of, here you go. I'm helping you out. You're making bad decisions financially. Here you go. Boom. And I don't have to keep dicking into my pocket because it's annoying. My daughter doesn't see things the way I would want her to see it. Hopefully in time she will. But that YouTube channel, it funds a lot of things in my personal finances that I don't enjoy paying for because they're just taxes placed on me because I have no control over the outcomes. And $20,000 to $30,000 a month is an easy go through. It's easy to go through that. Now you're probably thinking, I could live like a king. Not like I have. Like, it costs a lot to live the way I live, and that doesn't do it for me, folks. So I have to have money elsewhere, and I'm not getting it from mentorships. And now I'm not writing those books for personal profit either. I'm putting everything in my rough drafts in YouTube for 2025, so that way nobody can go and photocopy the book and sell it through Telegram, sell it through their little bull crap of marketing strategies they're going to use, so they can make money off of it. You will all have open access to it there. And it's better because you're going to watch me do it with real money accounts. What I'm doing, what makes sense, what am I tapping into, what lessons am I using, and where can you go and watch that in deeper in detail? What areas and what playlists should you look at? What did I do here, and where can you see the information of what I use there? Here's the video. I'm not going to tell you the minute marker because I don't have the time to do that. But your advantage is whenever I start talking about this is what I used here, and the information is in this playlist or this particular video, in my comment section, when you post in that comment section, you can only see your comment. So that way you can have your own little scrapbook of notes. Say, okay, ICT talked about, this is where he talked about how he used the order block as an entry model and how he used the parameters for managing the risks. This is the part where he said that. Nobody else's comments are going to clutter around that. You have the perfect study note application with my videos by having my comment section held for review. That means everybody can post and I see every comment. But as soon as I see something that's inflammatory, I mute you. You still will see your comment, but I will never see your comment again, and nobody else has ever seen it. So just know that there's a lot of people that come in and they think that they're doing some major damage. They're not doing any damage. You're wasting your time. But that comment section is a valuable resource for you as a real student that you're really trying to learn how to do this and manage the information and how to go back and refer to it. Use that comment section on my YouTube videos because it will afford you the luxuries of knowing where certain things are in a video journal format. I mean, if you download my videos, you can still do that and write the times and stuff in your personal journal. But for the folks that don't want to do that, just use the comment section. That's all you got to do. Just write it there. Nobody else can see your comment. No one else can see it. Only you see it. That's why everybody says, it's usually the folks from India. They'll come in, they'll say, why no comments? Video has all these views, but no comments. Why is nobody talking? And it's for people that don't, those individuals aren't really following me when they leave comments either. So I don't know what it is, the fascination from folks in India. They want to see comments. I don't know. But simply place your comments that have useful information for you when you're watching the videos, and you will be much better equipped to track the progress throughout 2025 that way. You can also, like if I'll refer to certain things, and invariably what's going to happen is I will say something during a presentation, and I'll cite a certain video. And I may even promise to put the link or the description of the video to find it on the library on my YouTube channel, and I may fail to do so. And the way you cover your rear end and me is in the comment section, write down the reference to it, and then put the actual link to that video in the comment section. So that way all of your notes about that video are germane to your focus. Nobody else sees them, and it's not cluttered or lost. And there's going to be a lot of people say, well, why don't you just leave the comment section open so that way we can just look at everybody else doing the legwork for us? Because it'll get lost. And I'm not babysitting trolls. I don't care about anybody talking negative in what I'm producing next year. I'm busy making money. You're all welcome to watch me. You're all welcome to watch and see how many trading opportunities am I really interested in taking based on the school of thought. Short-term trading, day trading, swing trading, and position trading. I'm normally not a position trader. I'm very uncomfortable trading in positions. But if it's a mega trade, that is a position trade. That means you're going to place a trade and you're going to hold it for weeks as much as several months. And because I know that the environment's about to change and get real loose and fast, the market's going to get really animated, not in a untradable fashion where it goes up and down like a heart attack on a, EKG. It'll look much more structured, much more symmetrical. And it'll be a pleasure and so much ease to get in and get out of the marketplace. Because it's going to do that, and because there's going to be a lot of things that's going to be gyrating around through global trade next year and in 2026, interest rates are going to be a factor. That's going to drive the commodity markets wild. That's also going to drive the equities markets wild. And these big movements where daily ranges are going to increase as a steady diet. Whereas we have large ranges right now, but there's a whole lot of give and take back and forth. You notice that this year? When you're watching the markets, there may be large range days, but generally it's met with a lot of back and forth price action. Then you get this wild, weird run in price action that just simply like, why does it want to do that now? Those types of things I think will reduce in frequency, and you're going to get a whole lot more symmetrical price delivery, meaning that trending days will be easier to trade, where they won't be just at the open straight up and you just miss the entire run. Those things are very, very difficult to trade. And the only way you can trade them is by chasing price. And that's why it's important that you understand that I generally, if I don't have a position open beforehand, I'm not trading those days. And I don't care how much it goes up, because I can't bring it to a point of decision where I'm going to take a trade based on, I'm going to miss the move because it's moving really fast. There's too many other trading days and opportunities for me to take a trade that makes a better sound decision with managing the risks. And you want to be very cognizant to the facts that while we are going to have better conditions technically the next 2 years with Trump being in office, it does not negate the importance of having sound money management and risk management in your trades. It doesn't mean just go full on whatever the maximum leverage is I can afford to do it. No, absolutely not. If you understand what I'm saying is you can start with the lowest leverage, okay, the lowest leverage, and let that compound over the next 2 years and be so much more pleased because you didn't sweat through it versus I gotta go out there and do the maximum damage and try to make as much as I can. And then in reality, do as much damage as you possibly could and not really like what you did, not feel comfortable while you're trading. The key to efficient, long-term, consistently profitable trading is being comfortable while you're trading. If you're fearful or scared right before you take a trade or enter, right away, you're probably trading outside of your model or don't have a model. And or you're expecting to be trading with too much leverage. Now, what I just said, a lot of you just poked your ears up and said, I'm not listening to that. But you need to hear it. If you're fearful and anxious before you put a trade on, one of two things are happening. The absence of a model entirely, or you're not trading with it. And most likely is you're trying to enter a trade with too large of a leverage. You're trading with too many contracts, too much risk open. Now, the influencers aspects to trading, when you see people, online that are live streaming and they're trying to make you think they're the number one day trader on the planet, chasing price with no model, just simply getting in there trying to do something with luck. That's not skill. And eventually you're going to see these individuals fall, and they're not going to be able to replicate that again. And they're going to melt down in front of you on their social media accounts, and they're going to go through all the same stuff you've seen them do before. I'm speaking to you right now. Start sizing down, be consistent about it, and sell the idea that that's a good thing. Your student base, your viewership will want to do those things. Your viewer base will grow because of that, because everybody that simply watches me trade and build up, 30, 40 contract positions, they like watching it, but they know in their hearts that they don't have the courage to do that. Even if they had the money in the account, they would never have the heart to be able to do that. So when I teach concepts like trade with one micro, I had the best feedback when I taught that using that logic. Why? Why do you think that happened? You would think that watching me trade 30 contracts and make $100,000 in a single day, that would be like everybody wants to do that, right? Who wouldn't want to make $100,000 in one day? And then I get feedback, the most positive feedback, and the most appreciation for when I was showing micro account trading. Because the average person that wants to learn how to trade doesn't have the skill set. They don't have the bankroll to be able to trade a position size or the comfort being in a position with that much leverage. Sure, it's fascinating to watch, but they know in their heart they can't do that. So what does it do? they start building up walls. They're saying, okay, well, I'm going to start compartmentalizing this person's content. And really what they're trying to do is shield themselves from the emotional damage, psychological damage of watching something that they can't replicate. And they know that it's too far outside their scope of prowess or capability. Their skill set will never take them that far in their mind or their expectations. Now, that's not to say that someone can't trade like I'm trading. It just means that when the viewer watches it, they start thinking to themselves, well, the first thing is right away, it's demo, or it's a paper trade, or it's hindsight, or it's delayed data. When none of those are the main premises why I'm showing the example. That's not what I'm doing. What I'm showcasing is that you're not limited, and you don't need to trade all the time. If you wait for the right setups and you have the money management behind it, you can build large positions up on a sustained price run, and you can make a whole lot more money than you could ever imagine. But it incurs risks, like everything. But when I talk about things like the ends series, where I went down to the 20-year-old me and talked about how when it was hard for me to pay for my cable bill a month, and that's when cable was kind of cheap. I was contemplating getting rid of cable because I just simply couldn't keep up with it. I wasn't trading yet, and I was just going through school and ending my pursuit of computer science degree, and I wanted to be a systems analyst. That was my job decision. I mean, that's where I was trying to take myself. And then the trading bug bit me. The ideas of making money when I first started was simply me trying to just make $250 a week. That was Inner Circle Trader, November 5th, 1992, on a Thursday evening, in an old dusty couch that my aunt and uncle had down in their family room. I sat down on a notepad and I wrote down, I want to make $250 a week, every week. If I do that, that means I'm making $1,000 a month. And if I do that and I can save that, if I can do that, I'll retire before I'm 40 years old. So I had a retirement plan of 40 years old. So my plan, my time trajectory was pushed out 20 years. You'll never see an influencer tell you that. Can you imagine? Can you imagine ICT first came out? Okay, guys, I got all the answers you're looking for. It's going to take you 20 years to get it. Nobody's subscribing. Nobody's watching my videos. Okay. So, but just understand that when I first started all this, my expectations were so far in the future and low hanging in terms of expectation. I didn't place a whole lot of, requirements on myself. $250 is relatively easy to do. Trading any market, like any market, affords you that. So, 5 handles in corn yields you $250. One handle in corn is $50 per contract. 5 handles is $250. You could literally sneeze and make that in a quiet day trading corn. So I wanted to come up with a number that was, in my opinion, something that is reasonable without a lot of difficulty, because I had a job back then. And I wanted to focus on finding something that could be replicated pretty easily, consistently, and not require a lot of my time. Because I was trying to repair myself as a man. Like I was recently divorced and trying to find my way in the world, as a single man, brokenhearted. So I didn't want to place too much of a burden on me in the beginning, because I knew if I wasn't able to sustain that target being met, that I would quickly lose interest. And I couldn't imagine anything else in my life at the time. I didn't want to pursue anything else. I had already invested since I was in 6th grade, all of my math and science studies, both in my personal time and in college format. All of that was pursuant to me becoming a system analyst, and I wanted to be in that field. And the doors weren't opened to me there. And I felt very defeated at the time because my GPA, my ability at that time in that field was very high. I worked very hard and I was passionate about it. Um, but I guess God said, no, that's not what I want you doing. But this evening, on November 5th, 1992, I had epiphany. It was an awakening in me where I was like, you know what? I could grow this over time. And if I just did this only and sustained just this and never did anything more, when I turn 40, I could stop working. And then I can do the things I want to do. Whatever those things would be, I could afford to do it time-wise and I could have the money to do it. And everything I did from that moment on was working towards that goal. And by me studying with low expectations in the beginning, it never allowed me to be discouraged. Any little setback was so small that it didn't hurt me. And when you watch influencers and you watch people sell courses and write books and do all these boot camps and all these things that try to get you so motivated to try to reach to the stars right from the first day, that to me is a little unfortunate. And while it's limitless in terms of how much money you can make over time, once you know who you are as a person, how you think, what impulses tend to materialize in your personhood, all those things are going to be factors in trading. And trading is a wonderful mirror to show you where your flaws are. And I wasn't prepared for that type of stuff. And when I was met with those things, these character flaws, I tried to hide them. I tried to sweep them under the rug and pretend they weren't there. And they were problematic to my development. And over the years as an educator, I put you as a student in those very similar scheduled positions. Very, very similar. And when I was on Baby Pips, I was actually introducing the very first things that I was noticing in the marketplace. And I was creating like a test tube environment to see who could fall into the same pathway and if I can create another ICT with the same types of conditions and only focusing on this information only. And, while I was excited to see it happen, it didn't happen. So, but everything I've ever taught is a natural progression of how I acquired the information, the understanding, and developed the concept. So when I go through my journals, if you had all my journals in front of you and you read them from the very first one to the end, and you did like the timeline of everything I've ever built and implemented or conceptualized as a trading concept or what I felt was impactful for trading, at this moment right now, you would have everything in that timeline. So every playlist, everything that I ever talked about was basically all of my study journals in a timeline. And I've always maintained that. Everything that I've ever introduced as a conceptual idea in the timeline, at the timing of me releasing it, it was only in the timeline of how I had it in my study journals. I have a lot of people say, could you share pages from your study journal? Could you do this? Could you do that? You're asking me to show you my most intimate moments. It's like it's like me inviting you into my bedroom at night with my wife. Like that's the level of intimacy that you're asking for. And it's unheard of. Don't ask for that stuff. Because in those journals, I'm in the early years, I'm really being combative to myself. Like I'm literally being my most critical adversary, and I don't realize it. So while that was important for me to recognize it in the early years, it's not something that's helpful. In fact, I hurt myself. A lot of the scar tissue was self-inflicted. These are things that I reinforced in my mind that I caused on an individual basis. Like no one else outside of me caused those things. When I lost the account and blew the accounts and all these repeating errors, no one outside of me was the catalyst for that. It was me. But in the early years, I was faulting everything else that I could as a means of not taking personal responsibility because it was too painful. So I want you to understand that what we do in 2025 together as a community, the expectation is that for the people that have been with me for a long, long time, I have people that have been with me since my Merc days, okay? And that's Internet Relay Chat, not Merc like MERC. It's MIRC. When I ran a day trading channel with 1,000 members, I'd call the S&P every single day. And just the morning session, not the afternoon. But the folks that were with me there, I have a few of them still follow me. They're not on Twitter, but they follow me on my YouTube channel. And some of them are surprised to see the level, because they thought they knew everything that I had back then. And to see the level of precision, the things that I teach now, and the timing aspects of the market, they're like, this is night and day different to what they were being introduced to back then. I'm talking about 1996, 1997, 1998, those years leading up to 2021, where I scrubbed the whole Internet Relay Chat. That was all stopped then. And I went into kind of like by myself, nothing on the internet for a couple of years. Then I came out as another persona. I've been a lot of individuals on the internet. A lot of you don't realize it, but I have used different. Now, and when I say this, someone's going to take this soundbite and say, see, he sock puppets. I've never sock puppeted. Okay, and there was an individual, and I said, I'll say this just for completeness sake. One of the moderators on Baby Pips sent me an email saying that a ISP address with my ISP address at the time appeared to have created another account and was talking, kind of like glad handing, like self-love, self-praise. And I didn't need that. I mean, when I went into their chat room and when I went on their posting boards, I had the largest following. And all you had to do is just read through it, and you'll see what you see on YouTube in comments, and you'll see it in Twitter. Largely, it's everybody saying, thank you, this is great, keep doing what you're doing, I love what you're doing, blah, blah, blah. So I never needed to create another alternative persona to self-praise myself. So I don't know how my ISP was cloned or duplicated or whatever, but she sent me this email, and it gave me an infraction. Like, if you do 2 or 3 more of these or something like that, I could lose my account. So I got mad. And I posted it publicly on the forum on Baby Pips. I said, this is nonsense. I did not do this. I don't need to do these things. And I got really upset, and I took all the links down in the YouTube links to the content, because I was like, you know what? Basically, you're not asking. You're suggesting to me that I'm doing something fraudulently when I don't need to do it fraudulently. I wasn't doing anything for money. I didn't do anything except for produce the content daily, and my videos and my threads on Baby Pips were the most widely followed. I had 2 of the highest, and you go over on Baby Pips still to this day, my threads are the highest viewed, and there's nothing in them now because I took all the links to the YouTube content down. But I left Baby Pips. They didn't kick me out. I left them. And I guarantee you they'd love for me to come back now and bring all kinds of traffic to them. But I brought them traffic. I did those things for simple pleasure of producing the content and teaching. And when I was accused by one of the moderators over there in an email, nobody else saw that. I chose to make that public. I did that because I was offended by it. I was like, this is nonsense. I don't need to do these things. And when I did have an Instagram account, I don't have Instagram. I created an Instagram account, and then it was hacked, and then somebody was using it to go into people's DMs and offer them mentorship. When I don't do mentorships, and I don't DM anybody. So there's a guy on Instagram right now that's not me. And there's a person on TikTok. That ain't me. I don't have any of those social media accounts. So there's a vested interest in people trying to, number one, mar my image or pretend to be me. And it's always because they're either trying to tear me down so they can look better, which is impossible, and or they're trying to replicate me and pretend to be me so that way you pay them. And I'm saying I don't get paid for anything. Like, I'm literally on another Saturday here talking to you with my free time that I could be doing whatever I want to do. And I'm choosing to build you up, to inspire you to stick to the course and stick to the process of working on yourself and not needing to pay other people to help you do it. You don't need to pay anybody anything. The only thing you're doing when you pay somebody else is you're increasing the level of expectation at the end. You paid for that information. So therefore, you better be profitable. You better be easy. You better make it easier for me to figure this stuff out because I paid you. Here, the economy is this. I'm going to give you the best. It's going to take you a lot of effort to get through it. And most people will fail. Not because the concepts don't work, but because you don't have it in your heart to stick with it. Trading in the beginning is not an everyday success story. It's not. No matter who teaches you what, it ain't going to happen like that. We all want it to be like that. We all hope and pray it's going to be like that for us. And we're looking for the person that promises that's going to be happening in their hands or their mentorship or their tutelage. I can promise you this, you're never going to find that. If it was ever going to be possible, it would be with me. And I'm telling you, I know enough to know that I cannot produce that in everyone because you're all going to do things differently. You can have a set protocol process, step by step by step by step. Only do it at this time, only do it this direction, only trade this market, and never any other instance of doing it any other time. Just simply, this is all you do. And you won't follow the rules. You won't follow the rules. So that's why I've learned, and I learned this really through my own hands. When I had rules as a 20-year-old, I never followed them. I would spend so much time formulating and fashioning all these specific things, do and don'ts. If this, then that. And in the beginning, as a young man at 20 years old, you don't have discipline. And all these guys out here teaching, they're all 20-year-old. They don't have the discipline. They don't have the personal responsibility. And they have nothing on the line. They're all teaching in hindsight. They're using demo accounts or market replay. Where is the reality of if they're wrong, something's lost? They don't have that. They're so new, they don't have an image to protect. They don't have a brand that they can't just rebrand and start new. So there's nothing for them at risk. It's all upside. So if they do the proper marketing, proper in the sense that it entices you, you'll pay them. Now, I'm not suggesting in any manner that someone that comes out, so for the young men and women out there that are listening to me that are highly offended, you probably already sent me comments. I can hear a lot of things being posted to me. It's a constant blink, blink, blink in my headphones while I'm talking to you. Some of you probably have been sending me inflammatory remarks, okay? And it may be based on what I just said here. But let me remind you, I've said this rather candidly. If someone is versed in trading and they are comfortable sharing that with you real time, and they prove to you that they have an ability to read price action, I don't care if it's demo. I don't care. If they have a service where they have the ability that they call the market in the presence of people that paid them, and they're doing that behind a paywall, I have absolutely nothing against that. Because you're showcasing a skill. You're not parroting what I taught as an echo and saying, oh, ICT made a lot of money teaching. All I'm going to do is parrot what he said and talk about a chart that's already happened, and I can make millions of dollars too. And he can't be mad because I'm giving him credit. No. That's not credit. That's plagiarizing and being an echo, and you're trying to have the safe avenue of saying, I give you all the credit, ICT. No, you're using my name only for marketing. And when you're big enough, you'll stop using my name. I'm saying stop using my name now. Let your own prowess, your own skill set, let that do all the talking. Because I promise you, if you have the real skill set, people will talk about you You'll never need to advertise on YouTube. You will never need to do a Facebook ad. You will never need affiliate marketers. Hey, if you get somebody to sign up to my stuff, I'll pay you a commission. I never had to do that. I never had to do those things. Why? Because they watched something happen that nobody else was able to replicate. And I'm the most imitated person. And it's offensive because if you have that skill set, then you would just simply showcase it and you would never need to bring my name up. You would never put my logo in your stuff. You would never put my name and face in your ads. All that is for you to market with my image, my brand. And I marred my image this year so that way you can't do that. Think about it. Why would anybody want to learn what ICT couldn't do in Robin's Cup? That's what you're forced to market with now. Oh man, you got a real hard sell now. Think about it. Oh man, you didn't see that one. You didn't see that one coming, did you? Oh man, everybody are playing 2025 mentorships, and they all been getting their source material out of my videos on my YouTube channel. And they want to talk about order blocks and fair value gaps, and I'm gonna have a mentorship, baby. Mentorships opening up in 2025. Yep, and so is mine with real money. No props, no prop firm demo stuff. Nope. No market replay. No delayed data in my live stream, pretending that it's real and live with broker statements that never matched the executions on videos streams that were now deleted. Hello. Hello. Still not a cuss word said, isn't it? It's nice, isn't it? I want to introduce you to the truth as well. Okay. Part of my online persona is you think I'm bipolar, but I'm not bipolar. I have done so many things over the years and pantomimed so many things. I absolutely know exactly what I'm doing every single time I say it and do it. It's sometimes it's done way beyond the level of delivery I was expecting it to be. But you all honestly believe I'm unhinged. I'm not. I know exactly what I'm doing. I'm capturing your attention by any means necessary. And then I'm challenging you. And for the people that don't really want to learn from me, they want to come here and take shots against me, I'm trolling them and enjoying it the entire time. I show them a faux witness to some kind of contrived weakness that is not there. Think about it. I give you enough to hang yourself, whether you love me or hate me. And the true test is, are you here because you want to make yourself better, or are you here to worship somebody? I'm not your hero. I'm never someone to be worshipped or looked up to. Never. And you should never aspire to be like me. Ever. I am a sinner. I am somebody that makes mistakes. I am a human being. I failed a lot. You should never say, I want to be like you, ICT, when my intentions are for you to be better than me. I purposely have pantomimed someone that doesn't exist online with a supposed mental illness. And I waited for people to take shots at me, and their low-class attempts to do so shined a light exactly on who they are. And they were selling services. They're acting like a financial advisor, and they carry themselves like that. That's shocking. And they took the bait perfectly. One of them's real quiet right now. Another is a blowhard. And you'll see them tumble. They're having a lot of fun right now, as they should. But the people that I create as profitable traders, they don't owe me anything. They don't owe me anything. They don't owe me a high five. They don't owe me you helped me get here, ICT. It wouldn't be possible without you. Never, ever, ever say those things. Never say those things. Because I didn't put you in those trades. I didn't tell you to take that risk. I didn't comfort you throughout the process of you entering that trade, holding the risk, and then taking the profit when you did. I had no part in that. And while I can understand you're trying to give it the respect and the I guess the appreciation for the influence I had over you, your success is your success. You worked for it, you believed in it before it came to fruition, and you earned it all by yourself. I had no part in that. Sure, I have content up on YouTube. Sure, I have lectures like this where I'm talking about encouraging you and giving you a mindset overhaul. But all these things pale in terms of what matters most, because I can talk and talk and talk and teach forever until someone takes that understanding and makes it their own and applies it to themselves and they correct their shortcomings, until they do the work, the proper back testing, the logging, the refinement of who they are as a trader, defining what their model is going to be, trading on what time of day, what instrument, and not being influenced or impulsive about chasing something because somebody else, even me, doing something differently. Oh, I better do that. I better keep up with it. I better change directions because ICT and the crew are doing something now new. I have a lot of students that never left or migrated from Forex and they're making money still. They are successful students because they didn't change simply because I was more inclined to go back to futures trading. They stayed right where they're planted and they're still profitable. They graduated. That means they don't ever need to worry about listening to an ICT space. They don't need to go over to a YouTube channel and see what's he up to now. They don't need to see what my next tweet's going to be. Because the majority of what's going to come across X is me just having fun. I've been very candid about that. 90% of what I tweet about, they even call them tweets anymore if it's X. Like, what do you call that? Yeah, I'm going to stick with tweet because it makes sense to me. But whatever I post on X is me being fun. Like it's about me cutting up with y'all. And not everything I say is meant to be serious. And I like to be sometimes dry in my humor and sarcastic. It doesn't usually play well for the folks in another language. They think everything is cut and dry and it's binary. And I don't consider myself a binary. In this case, I guess it would be non-binary, wouldn't I? I'm going to get some flack for that one, right? But the idea of following somebody and giving all of your credit to them because you succeeded, that's nonsense. That's absolute nonsense. Any success that you get comes by, first, the grace of God, whether you believe in Him or not, and your own work. Your work ethic, your tenacity, all those things are going to be hallmarks to your success. And you owe no one, me included at the top of the list, you owe none of us any credit for it. I don't give signals, so that means I didn't give you that trade. I don't tell you where to place your stop loss in every individual execution, so that means you did it right by yourself. So when you show me examples that you did really well, I understand what you're doing. Believe me, I know exactly what you're doing, and I appreciate it. But stop diluting your success by saying, it's all because of you, ICT. It's all thanks to you, ICT. Stop. Stop doing those types of things. Just say, hey, this is what I did. You know what? Awesome. They're the ones I like to thumbs up or give a heart to because you're owning it. And when you try to do something and you did all the things that you thought were right and you failed at it and you make that post to me and you're not saying, I used your stuff and it failed. No, I tried this. It didn't work out for me, but I'm not discouraged. You're not giving me credit. You're not tearing down the concepts and you're owning it. I will always, if I read that comment, I will always like that. Because what am I seeing? I'm seeing someone that's being responsible. They're not trying to glad hand with me just to get me a reply or a heart, like that's a signature or an autograph. Like some of you, honestly, I can see it when you post to me. It's literally like you just want to have some kind of engagement with me. And I'm just a man. Like I'm just a man. There's nothing special about me. So stop trying to have that relationship with me. Think about what you're doing. Focus on improving yourself. If you want to grow to be someone like in my position where I have a lot of influence and a lot of people listen to what I say and whatever I'm presenting, they want to watch it. If your aspirations are to become like that and then be looked up to, it's going to affect you negatively. You might not think it's going to be like that, but it will be. So when we progress through 2025 next year, and if you do follow what I'm doing and it makes you money, and you're out there and you're talking in your own little circles and you're saying what you're hearing me say, and that analysis is being echoed by you and people that may not be aware of me. Like in Brazil, there's a lot of people right now cloning me. They're not saying they're ICT. They're not pretending to be a conduit where they're just simply translating it from me in my poor English into their language in Brazil. They're omitting any reference to me at all. And they're saying they discovered all this themselves, that they're somehow smart money, and they're not. They're just simply parroting what I've said. And there's a few channels on YouTube that's about to lose their entire show because they've done that. And I've warned you, and I know you're listening to me, so just expect it. It's coming. But I know that that's going to happen. I don't care. Okay, I don't care that you're going to take what I'm going to do next year and you're going to have your own little mentorships and you're going to follow what I'm saying and you're going to look smart in front of everybody else. Okay, wonderful. But it's not going to be a whole year of it. It's not going to be a whole year. I'm not obligated to do this for the entire year, but I will do it for the first half. And then I'm going to be doing some traveling the second half. Like I have some places I want to see and experience, and I have some things I want to take care of in my other businesses. So, and they're not trade related. So, first half of next year, that's my goal. The 2025 mentorship is about 5 months or so of me sitting down, going over all the asset classes, what I intend to do, what I want to put real money behind. It's not meant to entice you to take real trades with it. In fact, I'm warning you not to do it. Okay? I want you to go in with a skeptical mind. I want you to go in there expecting everything I'm going to do is going to fail. That way, you won't put money behind it. And if it does pan out, just know that you've had a unique experience to see what it looks like beforehand. How much analysis goes into the decisions? What am I focusing on? What tools am I referring to? All that stuff. And you'll see that it's not complicated. I'm going to stick with very simplistic ways of doing it. It's not going to be 15 different models. I'm not even creating a new model. There's no new model necessary. But in January, I will teach you how to formulate and fashion your own model based on everything I put on my YouTube channel. My final point, and I'm going to close this stream out. If you were part of my private mentorship, when I was doing daily commentary and I would talk about the market for that individual day, many times I would say that you're learning the building blocks to formulate a trading model for yourself. In the beginning, it's normal for you to not know the direction of where you're going. It's normal for you to not know what PD array to focus on. And I was promoting the idea that you could organically arrive at which PD array that you're going to focus on as your multiplier, the thing that gets you into a trade, whether it be an order block, a fair value gap, a breaker, it's something to that effect. But you don't need every single one of my PD arrays to be profitable. And I'm going to teach in January in those 20 contracts, in those 20 individual lectures that will be pre-recorded, so they're not live streamed. That way it'll allow me to make these videos real short and concise. I know that sounds impossible, but I purposely make these things sometimes long, not because I love the way I sound or my own voice, but because I want people to physically put the effort into listening to good sound logic, in addition to me tucking in the little nuggets and the gems inside those lectures. So it's all premeditated, okay? And Kind of like when I tell you it's going to be a long one or a short one, it's a long one. Um, or if I say, all right, I'm done for the day, be safe. It's a running gag I do on Twitter. It's something I intend to do because I knew people are going to laugh about it. And the new people are going to be like, what is up with this guy? He just said he was done. He keeps coming back. I love that. It makes me laugh. It makes me smile. And I know if I'm smiling about it, I know there's a lot of you that get the joke. You know you've been around me long enough. And it's funny to see people literally lose their minds over like, this guy's out of his mind. Like he's impulsive. I'm not impulsive. But I play a character online that makes you think that I am. It's just that entertainer aspect of me. I love doing that. It gives me a great deal of pleasure and joy. It makes me literally laugh out loud. And my wife looks at me, what are you doing now? What do you do, Michael? What did you do? What did you just do? It's funny. And sometimes she doesn't get the joke, but it's okay. She doesn't need to get the joke. She just likes that it's not drama where it's hurting anybody's feelings. And it's something that just makes me happy. It makes me smile, and it makes other people that are part of our community smile. And it's hurting no one's feelings. And to me, it's fun. So the point is, you're going to see how you can pick certain aspects of what I taught instead of trying to have a kitchen sink approach, meaning everything that you have to make or prepare food is in the sink dirty. Okay. When you're trading and you're building a model, you only need a couple components, but you have to have a basic understanding. When should you? When shouldn't you? Those are very generic things. Knowing when the market's likely to be conducive for a easy trade, which I define as a high resistance liquidity run condition, that's a more difficult trading environment. Not impossible to trade, but a new trader is going to be very hard pressed to find the very first entry being met with no drawdown. In fact, they're probably going to get stopped out a lot if they keep trying, and if they don't know how to control themselves, they'll go on tilt and blow their account. Or if they use these funded account companies, they'll go into maximum drawdown and then they'll be forced to stop trading for that day. If I understand it correctly, I think that's how it works. I don't know if it means that you stop trading for that day still, or if it ends you. I don't know. I don't know the full dynamics, but the folks that are listening that do trade that kind of stuff, you understand what I mean. The point is, in high resistance liquidity run conditions, I'm not trying to trade those environments next year in front of you. I'm not trying to do that. I'm focusing on times where the market's more liquid and it's loose. That means it's going to be low resistance liquidity run conditions. That means when I'm putting money in these moves, I anticipate them to be free, fast, and loose, running right to where I want it to go, quickly overcoming the spread and allowing me to reduce the risk. That's what I'm looking for. My mentorship has always been predicated on that being the final conclusion to you as a defining process, condition to trade in, what environment, because not every single day is a trading environment for a new trader. It's not. And these campus crusaders that want to, parrot me in their mentorships and say they don't, they're out there trying to fill your head up with nonsense. They are not properly educated. They have no idea what they're talking about, and they're not equipped, and they are not even in a position of authority to be talking like an educator. And they're filling your head up with nonsense. Not every single day is a low risk trade for a new trader. And as an educator, I'm always going to start with that as my audience. And I am aware that most of you that have been with me for a long period of time, you have heard these before. You've heard these talking points before. It sounds redundant, but you're not the only person that's listening to me. And it takes a great deal of filtering on your part. And I understand it's not fun to do that because you want me to talk about something new all the time, some kind of new magic trick, some kind of new twist on something that will give you precision that this transcends all the, other models that I've ever taught before. When you don't need all that stuff. All you need is a simple know when to trade, when not to. And that's derived by experience and understanding what price action looks like between the relationships between high resistance liquidity run, where the market overlaps the previous candles a lot of retracements back and forth. It still might go to where you think it's going to go, but it's not going to be a straight shot. That's not the conditions that I'm teaching students to trade in. But I have to teach them reading price action in those environments because just like following the tracks in the snow when you're going hunting, you will recognize because you've seen it before. You've walked that path before. You know that there's deer walking in this pathway. So if you put up a hide and you wait, give it enough time, when? Always in the morning and late in the evening. That's if you were here with me at my home, it's amazing how like they're cyclical. All these deer show up in the span of 3 hours. There's a 3 hour window where we can set a clock to, this is like a kill zone in time. Right before dawn and 2 hours after dawn, I know I got 15 to 30 deer in my backyard at the edge of the forest. In the evening time, the same thing. I watch them come down the hill. It's always the same thing. Always the same thing. 1 hour before sunset and 2 hours after sunset. They're just there every single day. In fact, I had to tell people to get off my property about 4 days ago. They're out there stomping around in the forest. I was like, had to walk out. I said, what are you doing? What are you doing on my property? Oh, we shot a deer and we asked your neighbor if we can cut. I said, my neighbor doesn't own this property. I own this property. Get off of it now. But you're trying to find your way off my property, Jack. Okay? Get off my property and don't let me see you come back here again. I don't care if you shot a deer. You're on my property. Don't come back here. I had to put that in there because it's live, and I would edit that part out if it would have been a recorded session. But the point is, there's times where you know that these things are going to repeat, just like the markets. There's kill zones. There are certain times where you're going to operate as a trader and say, okay, these are my working operating hours. And you're going to stick to that. You don't care what happens outside of that. Hunters don't care what the deer are doing when they're not expected to be walking around in these periods of time, early morning or in the evening. They just know that they're setting up shop right there. It's called a blind. Okay, it may be a tree stand or on the ground or a little bit above the ground, but they're simply just sitting in one position. They're not trouncing around in the forest. They're sitting still. That's what you as a trader are doing. You're sitting there waiting for your opportunity to shoot. Now, I personally, I guess I would if I had to eat that way, but as long as they have grocery stores, I'm not going to go out and kill an animal. I'm not going to do it. Okay, I understand why people do it, but if you don't eat it, you're just cruel. If you're just shooting it to take its head off and put it on the mount of a wall, you're a jerk, in my opinion. But if you're consuming that animal respectively and taking it out quickly, I guess I have no problem with that. But I personally have never killed an animal like that. But in trading, you would think I'm like Elmer Fudd out there trying to shoot everything, or Yosemite Sam, right? That's kind of like what I was when I first started as a trader at 20 years old. I was like Yosemite Sam. Anything you said would cause me to get into a trade going long. I'm out there shooting, and I'm carrying on like a crazy guy because I wanted to be in everything because I thought I was going to miss every possible trade. And that's not realistic, but it feels realistic and feels like it's the proper mindset as a new trader because you feel like the next trade's the only trade. The next trade's the last trade you're ever going to have that could make money. It's a weird paradigm shift that needs to be taken where you first start thinking about trading and then gravitating away from, I need to be doing something every day. The first permission you should give yourself as a trader in development is, I don't need to trade today. Now contrast that with every other influencer out there. They're going to tell you that you have to, or you're not a trader. A real trader A real trader knows when to sit still. A real trader is going to have a higher strike rate and a lower frequency of trade, and that's just the truth. But you're never going to hear these people say that because they're incentivized. Why? They got to get you trading. They got to get you trading in these ridiculous thresholds of skill set that you don't have, where the money that you make in demo account has a trailing stop loss on your P&L. You ever stop and think about it? Because that's exactly what they're doing to you. And eventually it's going to come down and stop you out. You're going to hit maximum loss or maximum whatever it is, and then you have to reset the account. And they make money that way. And you are pushing your progress profitably further down the road. But the influencers that you're worshiping, they're making money off of that. So they're incentivized by you trading more than you should, taking unheard of risks, trading with leverage, hoping that you'll emulate them. So you blow your account and they can go out and do the things that they're doing that they would never be able to do because they can't make money trading. But they look like they are as an influencer. They look great. but they're really not as good as they're pretending to be. And you're feeding these people. You're physically giving them their lifestyle, and they're rubbing it in your face the whole time. You're in an abusive relationship, and you don't even realize it. So what I try to do is I strip away all that stuff. Okay, I got more money than all of them, and I could literally put them on welfare any given day of the week. I can go out there and show them they have nothing, they can't do anything. But that's not my motivation. My motivation is take the average Joe, the person off the street that says, hey, I just wish somebody would just simply talk to me plainly and not try to get up in my pockets about anything and show me what works and help me, put me in the right direction and give me the skills that I have to practice, and I will do it on my own steam. That's who I want to teach. And my millionaire students are the ones that have done that very thing. And a lot of them simply have nothing to do with social media, but they understand the components of making a model is not complicated. When they took notes from me teaching in the private mentorship, when I would say, you're going to learn a lot of things. I'm going to teach a lot of concepts, but the worst thing you can do is try to apply all of them. But every mentor out there that has my name, my logo, me as their mentor, trained and charter member by ICT. Let me explain something to you, okay? And I mean this entirely. If somebody came forward and they're out there marketing themselves as an educator and they're claiming that they're a charter member of me, that's the worst person to learn from because they have no class. When they signed on to be a student of mine, they signed on understanding that they were not going to teach my concepts. But they're no different than a panhandler out there on the road that lives in a nice home, that drives a nice car, but they're wearing rags asking you to give them money, and they're making $1,500 to $2,500 a day tax-free. They didn't earn that money. They didn't do anything. They're just doing something to pull on your heartstrings. They're defrauding you. And by having my name saying I'm a ICT charter member, I'm a this and I'm a that, I personally trained by ICT, like I'm Bruce Lee or something. Stop that. Stop paying these people. Stop. And I know I'm making you angry if you're the persons that are doing it. I don't care. You weren't supposed to be doing this anyway. And anybody that pays you is an idiot because it's for free on my own YouTube channel. And I'm continuously introducing further education. And I'm not asking for anything. I don't care if you use it. I don't care if you love me. I don't care if you hate me. I don't care. None of that stuff has ever stopped me. But the ones that have done very, very well, when I told them not to apply everything, they took the notes and they took it to heart and they applied it. Well, how do you do that? What am I supposed to do with all that content on ICT? Like, I would eventually, given enough time, I'll watch everything you got out there, ICT. If it's something that you say I should do, I will spend time. If it takes me one video a week, I will eventually get through it. Maybe, maybe not. But I don't feel like I have to do it if you point me in the right direction. So what direction would that be? Understanding there's conditions in the marketplace that are conducive for very easy trading, and there's other conditions that are not favorable for that. And most of my teachings are helping you determine what that is. Because no other book, educator, or course, or anything ever taught me that. I lost lots of money not knowing that. And because nobody else has a way of determining how to do that, I had to be the spokesperson for it. So I filled in all of the gaps that anybody that I looked at as a mentor when I was coming up, all their frailties, all their admitted weaknesses are all my superpowers. I took those opportunities and said, you know what? I'm going to be the mortar in between the tiles of this fortress of solitude. I'm going to fill those gaps in. I'm going to be the one. I'm going to use the experience that I took, and I paid for that experience with losing trades and blown accounts. I paid for that. So whatever I did at those instances, if I just simply reverse that logic, then there should be something that repeats, and there was. I was always buying when the market started going up instead of buying when it dropped down. I was always trading in a market that was high resistance, expecting it to finally break out. That's why I'm not a breakout trader. So I'm looking for conditions that markets leave open fair value gaps. I want to see imbalances stay imbalanced. That is a low resistance liquidity run condition market. That's exactly what every other educator out there does not know. And if they knew it, they probably wouldn't even tell you because it's an advantage. It's a superpower. It's an absolute game changer. It changes everything. And for the folks that have been with me for a while, that's never listened to me, even though I talk about it in my mentorship videos, you had a fast track of it with the 2024 mentorship where I showcased that. And now you see it. But everybody else got to watch it too, so you can't make mentorship. It sounds smart. So defining a market condition that's very favorable versus not so favorable, that's the number one thing. And then what determines whether you're bullish or bearish? That's easy. What's your weekly chart? Is it looking to run higher up to an imbalance or lower to an imbalance after there's been some shift in market structure where it's just recently ran buy side on the weekly chart and there's a sell side imbalance below where price is? Well, what's it likely to do? Reach down there. So your bias on a higher time frame is bearish. Don't fight that. No matter what you see on a 1 minute chart, don't fight that because eventually it's going to bend the knee to that idea. Now, is that hard? No. But I could make videos where it complicates it and makes it sound very scientific, but it's very simplistic. And reverse it. If the weekly chart has just recently taken sell side and it's been moving up, and we had a down close week I'm not saying we did this, but I'm saying in hypothetical terms, if you're expected to see it go higher, then we had a down close week last week, but nothing's changed in terms of it's reaching up to a higher weekly imbalance or a short-term high. Remember, because the market's only going to go to inefficiency or liquidity. If both are in existence, that's the strongest draw on liquidity. That's one of those gems of this tucked in there. See that? Your bias will be bullish in that condition. And then all your short-term intraday trades should be based on that. Filtering out any short selling. Don't do it. No matter how much it looks great or fast it runs for 20 handles, 30 handles, who cares? Let that go. In the beginning, as a new trader, don't take those trades. Only focus on where the market turns bullish intraday with that weekly bias being bullish. So now what did we just do? We just made it very easy. You just beat 80% of the problems and complications in your trading by doing what I just told you there. Did I take a 15-minute video to say something that took me 2.5 minutes? No. I know how to teach, folks. I know how to do it, but I make it hard for people that are lazy because I don't want to teach lazy people. And I don't care if that offends you. I don't care. I want people to appreciate what they get. And having it easy, having it your way mentorship, I'm not about that. I'm not the Burger King here, okay? So by having a condition that knowing that this is going to be high resistance or low resistance, you're aiming for low resistance liquidity run conditions. Having a bias that's determined by the weekly chart, whether you're bullish or bearish, if you know those two conditions and you know them comfortably, that means you know without a shadow of doubt, nothing can convince you otherwise. Until you're proven wrong with a losing trade, you submit to that idea. 80% of your complications in your trading has been dealt with at that moment. What's left? 20%. What's inside that 20% ICT? What is it that's missing? Where's the missing link there? Time. And I gave you that this year. The macro. It's a very simple concept. 10 minutes before the top of the hour to 10 minutes after the top of the hour. Inside of very specific hours of the day, whether it be pre-market session, AM session, lunch, PM session, last hour of the trading day, Asia session, London session. Go back and listen to 2024 mentorship, and I give you all the macros that you're expected to know based on what I'm teaching. I taught them this year. You don't need to see it in a book now. And I showed executions using them with a real account, by the way. It's fun seeing these people say, oh, it's demo. You have no idea what you're talking about. You have no idea. Even when it's shown to you in the recording, you ignore it. You're so twisted up because you can't accept it. You took the persona that I promoted myself as, and you took it hook, line, and sinker, and you can't see anything else. It's just, that's the only way it can be, right? I have spoken to you for a long period of time, and I had elevated emotions because of either good or bad, and still I didn't go for my stone cold Steve Austin foul mouth, which is always part of the persona. I have to be a performer. See, I studied ninjutsu when I was younger, and one of the tenets of ninjutsu is that you had to be a magician, you had to be an actor, you had to have the ability to cloud your enemy's mind and influence your enemy, influence your adversary, invite them to make a mistake, and then don't interrupt them when they're getting ready to do it. That's exactly what a market maker does. That's exactly what the market does to you. That's what the Judas swing does. All these things are invitations like a snare. And some of you trolls literally love to put your head right in my noose and tighten it up for me and then jump off the block. I don't need to kick it out from underneath you. You do it to yourself. And it's very entertaining. It really is. It's like over and over and over again, expecting a different result. And it's the same thing. My enjoyment, my pleasure. You make yourself look stupid. And you keep denying the evidence that's being brought before you. And that to me is insanity. Like, you can't accept it. Like, I did a phenomenal job. A phenomenal job. But back to that last 20%, because I want to finish this stream because I have a couple things I want to do before it gets nightfall here. Timing. So let's play devil's advocate for a moment and say that you've done the work. You anticipate that today is going to be a low resistance liquidity run condition. Okay? How do we know that we're going to have low resistance liquidity run conditions, ICT? Make it plain for me because I'm taking notes here, buddy, and you're putting down some really good stuff here. I'm going to make sure I understand it correctly. If you're trading on a day that has no medium or high impact news driver, you are inviting the opportunity for high resistance because there's no manipulation that's likely to occur. It doesn't mean it's always like that, but most times that's when it's going to happen. Medium impact or high impact news drivers on your economic calendar are going to invite low resistance liquidity run conditions, meaning that there's going to be some measure of initial manipulation, some kind of Judas swing or some kind of a fake fast run that's the opposite of what you think is going to happen because you understand the weekly chart's likely to go higher or lower. Then you're coupling that with the market being in a low resistance liquidity run condition, meaning that you have economic data that's going to manipulate the less informed, unlearned individuals, the dumb money, the street money, basically. So the smart money will cannibalize those individuals because they're impulsive. They're going to look at the move that happens right after the market starts trading. And if it's going up, well, let's just go in here and buy it and see how many points I can get out of it and call it skill. Okay? There's literally there's no system to that. It's chasing price. And it sells for $200 a book or a course now. Okay, but the point is this. If you know that the economic calendar is likely to give you a medium or high impact news driver for that day, then you know that it's more likely, you have the odds in your favor that there's going to be opportunity for low resistance liquidity run conditions. That means the market can have imbalances that stay open, which is what you want to see. That's a hallmark. That's a signature of low resistance liquidity run. That means you're going to have faster price runs, less retracements. How do you know it's not going to retrace, ICT? Because if I'm looking at price and I'm seeing imbalances stay open or not fully close in, that's exactly what it looks like. If I'm seeing every fair value gap get closed in and it spends time in those fair value gaps more than just one time in and leaving it, or one down, spend maybe two candles in it and leave it and then come down, touch the upper half or touch just the top of it and spring away, that is still not what you want to see in low resistance. Low resistance is you want to see open imbalances. Even if it's a partial, even if it's a small portion of it, that is indicative of low resistance liquidity run. That means that you're going to have a fast market. If you know what you're looking for, how do we know what we're looking for? The weekly chart is giving you a bias. You know that the economic counter is giving you the likelihood that it's going to give you low resistance liquidity run conditions. That means the market's going to want to trip up the individuals that don't know what they're doing, put them in the wrong side of the marketplace. You're looking for that. You're trying to trade in that direction initially. When everybody else is caught off guard and you're chasing price at the open, you're trying to buy that drop down. And it's scary in the beginning. It's really, really scary in the beginning, but it's okay. Once you get comfortable studying it and then practicing with it, tape reading, watching and saying, okay, hypothetically, I think it's going to stop here and it should not go any further than this level here. You're not taking the trade. You're not even demoing it. You're just paper trading it. I'm sorry, not paper trading. You're tape reading it. And you're studying it, watching what price does. And you don't have any leverage on it, so you don't know how much money you're making or losing, so you're not worried about the money. And you're watching price deliver on the basis of those macros. 10 minutes before the hour and 10 minutes at the top of the hour, there's going to be a run on price that goes right into an inefficiency or runs for liquidity. That's what they're designed to do. That's exactly what the macro does. It starts that spooling process. It does not complete it. It doesn't mean the only move is only in those 20 minutes. It does not mean that. And there's people out there literally trying to sell mentorships with parts of their mentorship saying those things, and they are patently false. They are not true. They have no idea what they're talking about. They're talking about things that are macro. They're not even macro. They're not. But because that buzzword is in the industry now, they're capitalizing on people that are foolishly impulsive and just say, "Her, you must be one of those guys that are charter members. You know the stuff that he's not teaching in those videos on YouTube. So if I pay you, you'll teach me those. You'll give me the study guides. There are no study guides, folks. These people that put that stuff out there, they're liars and they're frauds. Everything that you see that was supposedly study notes, all that was, when you watch the videos on my YouTube channel, those were the videos. The PDF files, the study notes, were just simply the pictures of the slides that as I changed from one slide to the next, I gave them as a PDF so that way they can scribble on it, put whatever notes they want on it. There was no other study notes. There was no PDFs outside of the slides that you're watching those videos. So anytime that the picture changes in those presentations for the core content lessons, and honestly, all of my charter members from whatever year you came in, come out in the comments section and say, that's the truth. There is no study notes that were apart from just simply the slides. That's all it was. You watched those slides in the video. So all I did was allow that video to be formulated in a PDF file. There was nothing additional added to it. But people lie to you and they make you think you're getting something extra when I didn't do any of those things. I didn't teach a 90-minute cycle. Okay. I mean, all this stuff these people, I did not teach Enigma. Now, truth be told, I have shown with commentary calling the market with Enigma. But I will never teach Enigma. I will never teach that. And anybody that claims to know it, they're a liar. You're welcome to come out here on a live stream and I will show you you know nothing. You'll never, ever, ever be able to do what I'm able to do. That will never happen. But I'm deviating from the thing here. Knowing when to trade, high resistance, low resistance. You want to trade in low resistance. Filter out high resistance conditions. If you can do that, number one, you're going to be better equipped to stay in the business long enough. You won't get chopped up. You won't have drawdown as much as you would if you trade in high resistance liquidity conditions. And 99% of influencers that trade live streaming, they always are getting forced entries in front of other people, and they're trading in high resistance liquidity run conditions. And my students that know this, they see it. And we comment about it all the time. In private, we're not in their comment section or chat room, part of their videos, live stream, trolling them. We're not doing that. But we can see that they don't know what they're doing. And the times that they don't do well is because they're trading in high resistance liquidity run conditions. And the few times that they do really, really well in their stream, it happens to be when it's in a low resistance liquidity run condition. And they don't know why their trades are doing well. They don't know why. They admit it in their own live stream presentations. I don't know what's going on. I know if I get out of here, if I turn the stream off, it's going to go do this, it's going to do that. No. If you're in a high resistance liquidity run condition, you're not going to think that way. You're going to be like, I want to turn this off, and I'll come back tomorrow and see what happens. So you can predict low resistance liquidity run condition days with the economic calendar. The bias is determined by the weekly chart. It's either going to go up for buy stops, or it's going to go up into an inefficiency that's above current market price, or it's going to go down and do either one of those. And where was the most recent rejection because stops were hit there? That's a very simplistic way of determining bias. And if you can't determine it at the time using those rules, that means you have no bias on the weekly chart. That means you're going to have to trade intraday volatility or do nothing. And as a new trader, my advice to you is do nothing. It's good medicine for you to be patient and sit still. In the beginning, every influencer, every educator, every teacher is going to tell you, go, 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 baby. And somebody that's got 32 years experience will tell you straight up, that's the poorest excuse of information, advice, and trading that you'd ever receive. Hurry up and fail is what that means. Hurry up and be a statistic. That's exactly what they're telling you. And that is the God's honest truth. I'm telling you, that is exactly what they're telling you. Whether they realize it or not, it is the truth. And when you're taking advice about trading every single day, that's somebody that's monetized by your viewership and your participation with an affiliate link below that video live stream, and you're taking advice from them, you're doing it wrong on all counts. And that means everybody. There's nobody that's spared in that comment I just made. You have to be very, very responsible with what you're doing and how you take information in and what source you're getting it from. If someone's making money off of the decisions that you're making, you have to question, what's their motive right now? How often are you losing listening to people that are monetizing your viewership or participation with an affiliate link? That's a pretty simple, straightforward litmus test, isn't it? But many of you aren't even doing that. So you have the understanding of when not to trade, a bias determined by the weekly chart, and then you time your trades based on the macro. 10 minutes before, 10 minutes after the hour. And it's going to start running towards an inefficiency that you already arrived at based on your charts in the direction you think the weekly chart's going to gravitate towards on a day when it's going to be low resistance because the economic counter tells you it's going to be a medium impact or high impact news driver. The days that have a split delivery on the economic counter, meaning that there's usually a medium or high impact news driver early in the morning around 8:30, and then there's one usually at 9:45 or 10 o'clock. That one, you're going to either scalp and quickly take your profit on the first run at 8:30 or thereafter, and then move to the sidelines and then let the manipulation take place in the 9:45 to 10 o'clock later economic calendar event. Let that one do whatever it's going to do, and then wait for the imbalances or liquidity left that is still in agreement with what you expected on the weekly chart. Now, how about that? How about that for getting right to the point, ICT? How about that for finding something that I can build all kinds of trading models off of that? Because that's exactly what the framework is. That's the framework, okay? That's the golden ladder that's in every model. Every single model that I trade with, every PD array that's applied to that works like gangbusters. But you can't appreciate that as a new student or a first-time listener. It doesn't make any sense to you what that means. What does that mean, high resistance? What does that mean, low resistance? What do you mean a macro? 10 minutes before the top of the hour, 10 minutes after the hour. What am I supposed to do with that information? You have to see it repeatedly used, referred to. And students that have been around for a long time now just know, finally, this is a cut and easy recipe for building a model. Everything, whether you use a breaker, whether you use an inversion fair value gap, a standard fair value gap, a propulsion candle, institutional order flow entry drill, volume imbalance, Reaper, Gallo, all those things, if they appear in that structure I just outlined, you have a model that is defined by ICT concepts, smart money concepts, because Daddy's talked about it. How many moving parts are there? Not many. But that's what's lacking in your model. That's what's lacking in your trading. That's why you consistently keep losing. It's not because my concepts don't work. It's because you don't know how to use them. When should you? When shouldn't you? What's the bias? It's going to be derived by the weekly chart because smart money is working on that weekly higher time frame because they're moving billions of dollars. They're not trying to do, 10 penny trades here, 10 penny trades there. They're not small nickel dime. They're not worried about getting an execution on that 1 minute fair value gap. But that 1 minute fair value gap yields an opportunity for you and I because we operate in low leverage. We don't have to force $20 billion in the course of this trading week coming up. But they might. And they have to spread that out over orders over the cost several days. So we have a whole lot of advantage as a small trader, somebody that's working with lower leverage, but we can make lots of money trading with that lower leverage. The opportunities that Goldman Sachs or investment banks like them, they don't have as many trading opportunities as we do. So they have to be very selective. Their quality and quantitative analysis has to be more stringent. It has to be very meticulous. They just can't go in there and willy-nilly every little fluctuation. And that's why they talk down about any intraday trading, because their models don't afford them the luxury of being able to do that. But because they say that, people that are brand new or they listen to these people wearing blue suede shoes and then block me when I comment on them, that was years ago, by the way, Anton, thank you very much. The aspects of just simply blanket statement saying that intraday trading and con men only do that, nobody can time the market, nobody can do that consistently. Man, they just don't know. They don't know. And for them to say it's true, that means they have to go back and recount all the things they said about it in the past, standing on the soapbox of Goldman Sachs said so. I'm an alumni from Goldman Sachs. And to say anything outside the scope of what they teach in their theology about why markets go up and down, it would be contradictory to what they teach. So they're never going to admit that someone can do that because it flies in the face of the logic that they promote. And if they change that, what do they lose? They lose their identity as an alumni from Goldman Sachs. Like that somehow means something. It doesn't mean anything. Because there are traders that I've produced that out-trade them. I have seen other people using retail logic, but with impeccable money management. That's the key here, folks. But they've used retail logic, and they run circles around Goldman Sachs. It does not diminish their quantitative and qualitative analysis that they use at Goldman Sachs or the likes thereof. They do very, very meticulous, fundamental, and foundational studies for why equity markets will move a certain way. I'm not going to diminish that at all. I'm not saying that there isn't any kind of valid appreciation that shouldn't be owed to that. It is. I have a measure of respect for it. But to speak from that perspective and say that they're the trading authority and anything opposed to what they do and what they say is nonsense. That in itself is nonsense. Because you have seen me literally call it to the tick. Trade it with a real account. It's not always a demo account, baby. It's not always. And you've seen my own students do that with their own analysis. So yes, Virginia, there is something a whole lot more than just noise on these lower time frames. So if you strip your trading down like that, and you approach it with, I want this to be very simplistic for me. I want to know when not to trade and when I should be focusing on taking trades. What happens if you have things like you arrived at a bias on the weekly chart and you think it's going to go higher? You clearly see there's a fair value gap on the weekly chart that you could trade up into, and it affords you at least 150 handles before it gets to the low of the fair value gap above market price on the weekly chart. So that means you have a really decent range. What happens if the next trading day has a 8:30 medium impact news driver, and it's all it has? There's no other news after that. And you sit in front of the charts, and at 8 o'clock, everything's setting up. You can see clearly they've left overnight London relative equal highs. And if it opens up in a manner where is a discount gap, the opening range gap will be a discount, and that gap will be like 50 handles or so. Now, there's no way to determine that for sure if you're looking at 8 o'clock, because it's 90 minutes away when the bell happens. But it's already giving you the framework that it's there. How I trade the pre-market session is I think that right before the news comes out, I treat that as the opening bell. It's not. Clearly, it's not at 8:30. I mean, we're an hour away from that then. But what I'll do is I'll wait for that manipulation at 8:30. Usually, it'll drop down, take out some kind of short-term swing low, or trade into a very small inefficiency like a fair value gap, or trade into an inversion fair value gap, something that was expected to send prices lower earlier, but now it's become an inversion fair value gap. So it will trade down into that, and then that's the Judas swing at 8:30 delivery. And then I would look for a long, either with that drop down as a Judas at 8:30, or if you're not inclined to do that, then what you would do, where you would expect to see proof of low resistance liquidity run conditions, expect it to do that, but don't engage it yet. Then wait for it to trade up, create a short-term shift in market structure, bullish, that you want a 1-minute chart minimum, and then see it create a small little fair value gap that it trades down into, and then that would be your entry. You don't need it to be a trade that has the stop loss below the lowest low at the Judas. You don't need that, because if you understand the fair value gap, you'll know that it's not required to go all the way back down there if it's a failed trade. If it breaks out the fair value gap, that's enough, because if it's valid, it'll respect the fair value gap plus a little bit below it, because we allow for that in terms of a mohawk. Just coloring outside the lines is normal. And then expect it to start running fast, and then either run the relative equal highs or run close to them, and then at opening bell, what will happen is they'll run those relative equal highs right on the Judas swing, or not the Judas swing, the opening range from 9:30 to 10 o'clock. And that first impulsive run, people will chase that, but you're already positioned, but you're exiting as it goes up into some other higher time frame PD array that's a premium, whether it be a fair value gap or relative equal high or a single high, where it's buy side resting. And then at 10 o'clock, the retracement that would come in for people that are chasing it, they'll be scared. And the only thing that's happening then is just it's pulling back down into a silver bullet long. Then you buy that and you ride that into 10:30 to 11 o'clock when you anticipate the lunch macro, where it'll retrace against that run, not all the time, but most of the time, and it'll come back down below a short-term low that usually forms after 10 o'clock. Now, does that sound ambiguous? Is that highly lofty, complicated speech? No, it's a very simple thing. It's very, very simple. But that's how you go and you apply it. Now, what happens if you get that drop down at 8:30? That drop down, right before it drops down, if it trades back above that, you can treat it as a bullish breaker. All conditions being equal. So already, we just talked about two different models using the same framework. The golden ladder, that framework, is simply understanding when should you, when you shouldn't. That's either high resistance or low resistance. The economic calendar tells you in a very binary way when it's likely to be high or low in liquidity. High liquidity is an absence of an economic calendar event, medium or high impact. That's the reason why I was teaching that in the private mentorship. The first thing I opened up with is knowing the economic calendar. Why? What's the importance of that? Because they're volatility injections. That's where the market will spool. It starts running, ripping away from some level, reaching into another. If there is no economic calendar event, can it create a low resistance liquidity run condition? Absolutely it can. But it's more likely that it won't. So you shouldn't be surprised that if you go into that day expecting it to occur, but then every fair value gap stays filled in, or if there is a fair value gap, it goes into it and spends time inside of it, or all the previous candles, every time a candle closes, the new candle overlaps the majority of that previous candle, you're in high resistance liquidity run conditions. Turn the charts off and go do something else. And I mean that. If you follow that logic, folks, I mean this. I don't care how long you've been trading. If you use that right there as a basis for what you're doing day by day as a trader, if you're a day trader, that will make you more profitable than anything else I have. And I mean that wholeheartedly, God's honest truth, because that will filter out all of the unforeseen days where you go on tilt. I promise you, if you go back and look at all the times that you blew your account, or you went into major drawdown, or you just hurt yourself financially, you did it on a high resistance liquidity run day. Beyond a shadow of a doubt, I guarantee you that's where it happened. And that was the epiphany for me when because I journaled everything like a nutcase. Like I was literally in there journaling everything. Back when paper and ink was cheap. I had a lot of that stuff. I had 3-ring binders full of things like that. And when I would go through and look at all of my bad times, the thing that jumped out at me was every day that I lost money, the chart would look fuzzy. That's why I say it that way. Because back then, I didn't have a language. I didn't have anything to describe it with PD arrays and this and high resistance and low resistance. That was the language I had to create to articulate the things that I had in my mind. But watching price on days that are very overlapping, it's the easiest way of saying it, where every individual candle shares majority of the previous candle's range. That's the clearest, easiest terminology I can use to define what high resistance liquidity run conditions look like. Now, it doesn't mean that it won't create fair value gaps on those days, because it can, most likely will. But what happens is, as soon as it forms it, it completely fills it and then stays in it for a little while. It doesn't want to run away from it. So it's high resistance. It's not creating imbalances that afford you a very low risk entry. When it trades into it, then you expect it to just rip out of it, take off, and run in your direction. That's what you're expecting in low resistance liquidity run conditions. But if you start identifying a market that is either producing high resistance liquidity run conditions, or you even suspect that it is, don't put money into it. Tape read it. I promise you this. I guarantee you, folks, I promise you with everything that would be something that you would judge me on. I promise you, if you use this in your repertoire, in your trading, it will yield you better results because you're learning when not to do something. And that is the golden ticket in trading, because everybody has an excuse to get into a trade. Everybody has that. There's no short supply of reasons to get into a trade. Everybody's school of thought, everybody's way of trading, every methodology, every indicator, every tool, pattern, whatever it is, we all have reasons to get in. But how many clearly define when you shouldn't? Every single one of them, every school of thought, every educator, every mentor I've ever had, and wannabe mentor, has never, not one time, ever clearly defined a time when you should not ever stick your toe in that water. Because if you do, you will be devoured. Or you will go in there, make one simple mistake and lose a little bit of money. You'll lose your mind over that and try to get back that $50 that you lost plus commission. And then now you're down 500. Well, you can't have that. Let's go back in here and get that $500 plus the drawdown and commission costs and fees. Because if you're trading with a real account, you have real things called fees. NFA fees, commissions, in and out. Hello, that's the real world. And that $500 drawdown day becomes a $2,500 drawdown day, or worse. And you look back at the day when it's done, you're like, man, why was I in that day? Look what it's doing. Right. And some of you don't even know that yet. But you have no excuse now today. You have no excuse because you put the time and effort to sit with me today, and I took you to the woodshed. Go back and look at your losing days. Go back and look at them. 99% of them are going to be high resistance liquidity run days. And if you're a live streamer, you're going to ignore that because you have viewership watching you and you don't want to be boring. You don't want to say, I don't want to trade today because you're listening to Tom, Dick, and Harry in the chat room. They're at work. They have no idea what they're doing. They're watching you because they're clueless. And they're going to have an influence over you. You're the influencer, but you're letting these morons, these idiots, these do-nothings in the chat influence you and hold you to the fire that you should say, you know what? It ain't worth me doing anything today. And I, as someone that's been doing it for a very long time, I know what I'm doing. If someone starts a stream, like I have 5 people, you know, 5 people that I usually watch the first 20 minutes or so of their live stream. I like to hear what they expect because I'm looking for them to be opposite of what I'm looking for. And then as soon as they give me whatever that garbage is, I mute them. And then I immediately just start looking at their chat window. And I'm reading what their chat's saying. The more emotionally sided they are about one side of the marketplace or defensive about someone else being argumentative about, no, it's going to go here. If someone goes against the influencer that someone is streaming, there's always this not breaker in the pattern. They break against the direction or the underlying premise to what the influencer or live streamer is saying. I'm looking for that person to step forward. And when that person says the opposite is going to happen based on what that person's live streaming is, now what that has done, and I've not seen one influencer not be influenced by their chat. They all are. They all are. But it's really critical in the first few minutes after the opening bell. I'm waiting for that sweet spot. Because what happens is, because the live streamers live streaming, the yahoos will say, oh, look at this guy. So-and-so saying it's going to go this direction. And now what that does is it makes the person that's live streaming very, very emotional. They get animated. They start dancing around because they're nervous. Now they're in an argument. They're in an arm wrestling match in front of their viewership. That's why their live stream replays don't have the chat window. But you have to watch it live. And you'll get the purest sentiment reading where smart money versus stupid money. And stupid money is influenced by stupid people. Think about how many people go online that listen to what other people are doing with their money and they want to just copy them like a sheep. They don't know what's going on that makes these people say that it's going to go up or down. That they're thinking, what if they're right? And I'm gonna be on the sidelines. I didn't follow them, but they made money. I'm gonna feel like an idiot. I better just do what they're doing. Because if they're right, I get to make money. And I can clap hand and clap with them and say, yeah, we're awesome. They want to be like us. They hate us because they ain't us. That's all that nonsense. It's funny. It literally is funny. But this is a repeating phenomenon that you can tap into because there's live streamers that are telling you this information and they don't even realize that they're a sentiment indicator, the purest, best indicator there is. But these same individuals won't recognize that they're in market conditions that they should not be trading in, but because they want to make ad revenue on their live stream, because they don't want to look stupid or weak in front of their viewership, they won't say, you know what, I don't see it today. I'm closing the stream down. Done. Let me tell you something. If live streamers start doing that, and they do it correctly based on what this outlined, number one, there's somebody that cares about their own money and they care about the viewership. Because why sit there and waste time talking about something that ain't going to happen? You don't have a low resistance condition in the marketplace. That means that your probabilities are low, that you're going to be profitable. It's going to be low, that you're going to be precise about your entries and your exits. It means you're going to be high odds that you're going to get stopped out, high odds that you're going to have deeper retracements, high odds that you're going to have a terrible entry and not even be accurate about entry to profit. So you have everything going against you, and then you add to it that you're going to do this all in front of other people. What is that communicating? Well, for people that are just brand new, they don't notice it because they just want to be part of the circus. They just want to have part of all this carnival-like atmosphere that they're here. Yeah, let's talk about this guy. Let's talk about ICT. Play that song again. Do this, do that. Remember that time ICT said this? And what about that guy over here? He live streams. He just lost everything. Oh, what about this guy over here? They're all doing that chatter. And they don't even realize that people like me are using them as an indicator, and I'm taking trades based on their stupidity. And then I come back with a dose and say, check this out. It's completely opposite to everything they're saying. Or I'm sitting still. I'm not taking a trade. When they're getting chewed up and they're crying. Oh, I wish I would have. You know, it's how it is sometimes, guys. Every day you can be a winner, blah, blah, blah. My superpower is knowing when not to do something. And it's something that you can learn how to do. And guess what that does? It frees up your responsibility as a live streamer. Go do something else. If your viewership is there to learn how to emulate a good, profitable trader, they'll recognize you avoiding bad days. Why would you not want to have that skill set? Show me, argue with me in the comments, argue with me why that's not a viable skill set that anybody wouldn't want to have. More so if you're an influencer and you're live streaming. Wouldn't you feel more responsible as an educator, influencer, someone that's profiting off of people's watching, being able to showcase your ability to be responsible and show self-control over yourself and say, you know what? I can recognize today that my edge is not available to me. Now, to Tom, Dick, and Harry in the viewership or on social media, they see that as weakness. Oh, you're not a good trader. You're not a good trader. Because later on in the day, someone's going to say, look what I did. And they're going to say, well, that guy or that gal made this much money and you closed your stream down. You suck. You're not a good trader. And these are the same people that are working jobs that don't know how to trade. And they're giving you a myopic perspective. And if I ever receive comments like that, I laugh that off because I know that was luck. That stuff exists. And you're seeing it happen on a day-by-day basis when people, in the opening bell, in the first few minutes, they're chasing price. They're literally trading in the Judas swing. And many times they're flip-flopping. They don't even know what they're doing. They're just reacting to whatever price is doing. That means you have no idea what you're doing. And you stay in the stream even when the market's indicating that it's in high resistance. That tells me, and that's why I'm very critical of certain live streamers because they aren't listening. And I don't care if you learn from this and never give me credit for it. I just want to see you get better. Everybody, I just want to see you all do better. But these are very generic traits to the marketplace. And because the markets are algorithmic now, it's very easy to determine when this is where it exists in price. And when it doesn't exist, when it's high resistance, it's hard to trade. When it's low resistance, it's easy. And it's also the same times when retail trading works really good. You want to know when bull flags work really good? Low resistance liquidity run conditions. Trade them in a high resistance and you're going to get chopped up, rode over, and just over, it's done. Might as well just get the reset credit card app because you're going to have to pay for it. But you'll never hear a retail teacher using those things teach you that because they don't know what that means. They don't know what that means. They'll see everything as a bull flag and a bear flag or a pennant, a triangle, a polygram, whatever. It's just an excuse. This is why I'm doing something. I've been watching price long enough and I feel impulsive and this looks like some kind of geometric shape and I have to geometrically get involved. It's silly. It's literally silly. Instead of simply saying, okay, do I have an advantage today? Because if I don't have an advantage, why am I wasting my time and money? I'm not going to waste your time. Everything I teach you, everything I teach and talk about is meant for you to watch and learn so that way you don't have to waste your time and money doing it ever again. But there has to be an investment. You have to make an investment. And with me, it's time. And the folks that spend the time with me, and they're really diligent about taking notes and learning and then going back and saying, let me see if what he said is really going on. All you have to do is take that mindset and apply it. And you'll keep coming back to me. And I don't have to incentivize you any more than simply just telling the truth of what the markets do and how to repeat. That's why you keep coming back here. Because if none of the things I taught worked only a few times and not an abundance of times, you would never come back. You see that consistency. You see that precision. But on high resistance liquidity run days, my precision evaporates. You ever watch the movie Ghost Rider? In the movie, Nicolas Cage, he plays the stuntman, right? And he makes the deal with the devil, okay? And he gives him the power to be the Ghost Rider. But he doesn't realize he's a slave to the devil. And he kind of rebels or whatnot. But in the movie, we learn that he loses his ability to be Ghost Rider when the sun comes up. Okay. Well, I'm the ghost of the machine when it's in low resistance liquidity run conditions. But when it's in high resistance liquidity run conditions, my ability, my superpowers diminish greatly. Can I trade high resistance liquidity run conditions? Yes. But I will be plagued with more drawdown, more stop outs, and more likelihood of having a net loss day than it would be if I had a low resistance liquidity run day. Low resistance liquidity run days, I'm going home every day winner. And that's a guarantee. I will prove that any given chance. I will do that every single time. High resistance liquidity run days, I'm just like the rest of you. The sun comes up, I can't be ghost. Does that make it plainer as an analogy? So why would you, if you're learning from me, I'm telling you what my kryptonite is. I'm telling you what my weakness is, okay? The markets are not going to deliver in a manner that is conducive for precision elements. It's not going to happen. So why would you sit there and arm wrestle and wait and wait? Well, it didn't do it on that macro. Let me see what it's going to do on the next macro. No! The macro is not going to help you. Uh-oh. Oh, the penny just dropped. Yeah, it's always towards the end, isn't it? People are going to catch on and be like, okay, his next video, his next stream, his next whatever, I'm just going to watch the last 30 minutes because that's where he's dropping all the good stuff. Now I got to mix it up and start doing it in the first quarter of the video or whatever. So you don't need a whole lot of moving parts, but you do need to have a simple framework that repeats in every model. And what I covered today is that golden ladder that will take you to a higher level of equity, higher level of proficiency, higher level of progress, and comfortable confidence. That's the difference. It's not arrogance. It's not arrogance. It just looks and sounds like arrogance to other people that don't know what they're doing. When they look at charts and they think, man, this is like a hieroglyphic chart. I have no idea what it's saying. It's another language I've never learned before. And that's a good analogy because that's what I looked at it as. I said, well, I'm going to create a language. I'm going to create a language that I see these things and I don't have a way of going into books and say, it's this, it's that. There's people out there that still claim it today, that this is all rebranded stuff. It is not. All you have to do, baby, all you have to do is strip it down. What book, what author, what page number, what paragraph, what is it, and what's it been renamed? And you'll expose me. I'm the charlatan then. But $5 million on the line, real money. All you gotta do is prove it. Some of you people are broke, but you're in my comments all the time talking up nonsense. Become a multimillionaire at my expense. Make me look stupid. There's people out there doing mockumentaries, okay? Making up nonsense. Literally. This is the one you should have. That's the one you should do. Go into every school of discipline that I supposedly rebranded and then ripped off and rebranded. Show me and the rest of the world where I took something and rebranded it and made it something else. Because I'm telling you right now, you're never going to be successful at that. It's never going to happen. But I would love to see you try. And I'm questioning why nobody's ever done it yet. Because they can't. They know they can't. But they know if they keep saying it in the presence of other people, and because most people are stupid and lazy, they're going to say, oh, well, there's 10 people that says ICT took this and took that and took this and took that. So it must be true because 10 people said so. So I don't want to go against 10 people and be bullied online. So let me just go along with them. And that's how social media works. So I use that stupidity aspect and I get the pot churning and I'll say something that's very polarizing or I'll say something that makes everybody have their higher expectation of me. And I don't do it. I'll pull your strings just enough because I know you all that are here to learn, you don't care what I do because you know that what I've taught you and you're making money with it, you don't care. Or you know me long enough that you know I'm having fun over here. But you know that there's people out there that literally hang on every syllable I speak. And they think, well, this guy said this and this guy said that. And they love being able to come back and say something. Like I'm somehow hurt by that. I'm not. You're doing exactly what I want you to do. And the 10 people that's going to watch you post that, they're going to try to assume that same perspective. And then they're going to watch me do it, explain it beforehand. And they're going to be like, what in the world? I'm probably wrong. And that internal wrestling match forces them to go into my content deeper. and then they're converted. That's what I do every single year. That is a wash, rinse, repeat with me. I do it every single year, and every single year my viewership grows. And every single year more testimonies come forward that this is the truth. This is how the markets really work. And I don't necessarily agree with everything you say because it's hard to read that out in the first few times listening to you. But I separated the man from the method, and that's the graduation point. I'm acting as a Judas in the beginning. I need you to remember what brought you here. You're not here to be friends with me. I'm never going to have dinner with you. You're never coming over to my house for the holidays. If you do, we're going to have static. But I'm here to teach you what you should know and how to operate. And some of you get caught up in the fanfare like I'm a celebrity, and you blur the line that I've made very clear that I'm just a conduit. And I'm going to challenge you. I'm going to make you uncomfortable. I'm going to force you to question why you're here. If you're here because of me, you're here for the wrong reasons. I made that mistake with Larry Williams. I lifted him up on a pedestal until I tried to do everything that he taught in his books. I paid for his signals, and I failed with it. I failed with it. His stuff didn't work because it didn't work. It failed in my hands because I didn't do it right, and I didn't have the skill, really. I mean, it's really what it is. I didn't have the skill. I was already hurt. I was in drawdown. I was trading with money I couldn't afford. I was over leveraging, and I couldn't even hold the position with the stop losses that he had. I was getting stopped out, and because I couldn't have the full stop loss that he had on the trade, I was like, well, I can't hold that trade in the S&P that long. And he's using a $2,500 stop. I mean, I can't do that. So I'm going to trade with 2.5 handles. Okay, well, that's not $2,500, but it was enough for it to go down and stop me out. His stop ain't stopped out, but I'm saying his stuff didn't work. I had that arc in my development too, where I turned against my mentor. I had this villain perspective of my mentor when it was me failing in my own hands. And I'm cognizant that it's going to happen in my own community. There's going to be people that's going to come up. They're going to love me in the beginning. They're going to use my name to garner attention. And when they get enough attention and they have their own community, then they're going to become the villain, the rival. Okay, you ever watch the show The Master, Lee Van Cleef, in the 80s? Shokasugi was the antagonistic rival student of the Master. My Master was Lee Van Cleef. He was the American that was supposed to be the first American to learn ninjutsu, and then he wanted to leave and go searching for his long-lost daughter. And because he was leaving Japan and leaving his clan, Shokasugi was Okasa. He was the guy that was going out and saying, no, you can't leave the clan. You're supposed to stay with us. You're not supposed to do that. So he constantly chased him throughout the TV series to try to kill him. Well, I have that. I have a whole bunch of Akasas, okay? They all learn from me, okay? I'm the master, Lee Van Cleef, okay? I'm not saying I'm the master because I don't think anybody should call themselves master of anyone. And nobody should call me master. There's one master, his name's Jesus Christ. And everything else, we're all human. We all put our pants on the same way, and we all go to bed and get up the same way, and we're all just weak. But I have students that have literally couldn't wait to get a better understanding about what they do as a trader and learn my language, okay, just enough so they can talk about it in market replay and then talk smack about me in their private community, but would not be able to do anything outside of that community when I'm standing right in front of them. And that's weak. That's really, really weak. And I was aware that stuff went on America Online when I was teaching back then too. I had that. It's going to happen. People are dying for attention. They're dying for it, okay? And this social media climate that we've created, this environment, okay, is ripe for mentally ill people that seek validation and just want to be worshipped and looked up to. I have friends, I have family members that love me. I don't personally care if you care about me or love me. I don't care. I'm not going to lose sleep over that. I appreciate for the ones that make that known that they care about my well-being. They pray for me and my family. I love that. But I'm not on social media to be worshipped or loved. If you really pay attention, my attention is for the people that don't like me. I like doing that. I get off on that. I mean, I really use, that's what I use X for that. What am I really teaching on X? Nothing. Once in a while, I'll share something for the people that are there, just because I'm going to toss them a bone. But most of my teaching is always on what? YouTube. I'm here to troll. That's all I'm here for. That's all I'm here for. It's my entertainment. But some of you get lost in the sauce and you don't realize what I'm doing. But that's the reality. I do it every single year for my own entertainment. And don't take X, don't take Twitter and the antics I do here and think you know me, because you don't. And don't think you understand my concepts or Enigma or anything because you spent a little bit of time with me, because you don't. Having that golden ladder framework on your trades, that is a constant. Those things are in every single winning trading model. Every single one of them. They all have those central tenets. If you don't have those in place, you don't have a high probability, low risk setup with any model. Ever. Ever. So my question to you is, have you spent enough time building an understanding that gives you the clarity before you sit down and take a trade? Are those factors visible in price action where you can't see anything but that? You're going to be one-sided in your opinion. You cannot imagine the market doing anything opposed from that. That means you're in high probability conditions. Then you're simply going to wait for time. What time? Well, if you're a London trader, you can trade the London session, and you're going to be creating a high or low of the overnight that will many times be attacked in the New York session, either on the basis of a continuation move where it runs to that overnight high or low and just keeps on going, or that is used for the Judas swing. It'll run that and then go the other direction. How do you know which one you're going to do, ICT? What agrees with the weekly chart draw on liquidity? You see how that weekly chart it's like Jupiter in our solar system. That big old planet, God was so perfectly engineering a big guardian. A lot of the asteroids that come out of our asteroid belt that circles our solar system, once in a while they bang into each other, or we have something outside of our solar system like a comet or an asteroid that's moving around. It may hit that, like pool balls on a pool table, they start moving all around. Well, Jupiter's so big, it has such a gravitational pull. A lot of the things that would be dangerous to us as a planet being struck by these things, Jupiter does a beautiful job of pulling it into its orbit and absorbing it. Okay? Well, that same thing happens in trading. The same thing happens with price. And understanding what that weekly draw on liquidity is like Jupiter in our solar system. Its gravitational pull is going to overtake the small little comets and shooting stars that are moving around on the 1 minute chart. These little fluctuations that you get caught up as a retail trader. Oh, look at this. It's a bull flag because it's on a 1 minute chart. That bull flag on a 1 minute chart, when the weekly chart's saying it's going down 250 handles, that's a false bull flag. And I'm selling them. I'm buying bear flags when the draw on liquidity is higher. How about that? How about that? So I'm not opposed to bull flags and bear flags. They exist, absolutely. But I know when they are going to fail, and I know when they're going to work. And in low resistance liquidity run conditions, if you like bull flags and bear flags, they're going to work for you. But if you're in high resistance, you're going to watch you lose money in front of other people. If you're honest and you show your account. If you're honest, because 90% of these folks out there aren't going to show you when they're going to get in, or you talk about the price they're going to get in. They'll say, I think it's going to go up here, I think it's going to go down there. Okay, that's wonderful. That's good enough to watch and observe. That's great. It seems a little disingenuous when you come back, oh, I'm going to get ready to take profit, but you didn't say when you got in. You didn't say what price you were getting in at. Like, that's, why even bring that part up? Don't even do that. Calling it right in the direction while you're live streaming, yeah, that's actually better than most people do in live streaming. But what complicates it is when you as a live streamer, or people that, if you watch them, you're witnessing their weaknesses never being compensated for. No, that was the wrong word. You're watching their weaknesses never be corrected. They keep holding on to their weakness. And what does that mean? Lots of live streamers say, I think it's going to go up to so-and-so price. They may use the depth of market, the ladders, the DOMs, if you want to call it that. It's not dome, by the way. There's a lot of orders up here or a lot of orders down here. Or they'll say, the book map says there's a lot of orders here, a lot of orders there. That doesn't mean anything. That doesn't mean anything. Book map, anything like book map, anything like depth of market, any of those tools, if you want to call it that, are useless unless you know what that weekly chart's going to draw to. And you don't need anything except for an old high or an imbalance, or an old low or an imbalance that's above or below price. And what did we just recently leave? A raid on stops above or a raid with stops below? After that occurs, look for the inefficiency on the opposite side of market price or the opposing liquidity, because that's what it's going to draw to on the weekly chart. That is easy, folks. That is ABC 1, 2, 3 of bias. What's difficult for you is you watch me or you watch other people trading, maybe even using different stuff, and they show this is what I made today, and it's completely against what you would expect to stick to as a weekly bias. So what does that do? It influences you, entices you to think that I don't want to use that weekly chart. I don't only want to simply trade in that direction. I want to be able to do what that person did, because you have the shiny object syndrome. Everybody's trying to show you what they did right. And because you're like a dog in a meat market, you're going to chase every sausage that's hanging over the edge of the table, every little scrap that falls to the ground. You're going to go right where that dropped and stay there, hoping another piece of scrap meat falls to the table and into your mouth. Instead of simply saying, I'm not going to worry about what other people think. I'm going to worry about what I think is going to happen using these tools. And if I don't get any traction with it, if I don't see any validation in using it continuously going forward, then I have done the work and I don't have to worry about ICT or anything he does ever again. And that's all I ask of anyone. That's it. It's a very simple process. But live streamers, they will showcase their weaknesses because they don't know what they're doing. They don't know where the market's going to go. They don't know how to enter because their entry strategy is chasing price. They call it momentum trading, but it's literally hope and pray trading. It's after the market starts moving a lot. Well, it should keep moving. If it gives me 10 handles or 15 handles or 20 handles in just static price action running into the same direction, I'll call that skill. I call that gambling. And there's nothing wrong with if you have a really good risk model of saying, okay, I'm going to go out on a limb and say that in my live stream or publicly, I don't know what I'm doing as a trader, so therefore I'm going to be honest and say I'm just trying to get whatever I can in momentum breakouts. Okay, say that. Then everybody watching will understand that you're impulsively reacting, and that means you don't have an entry strategy that's going to be repeating. You won't have an entry point that is always repeating. You don't have a mechanism that says, this is where I buy when I'm bullish. This is where I short when I'm bearish. And how do I know that? Because all you have to do is read their chat. They all have the same arguments. You never say when you're getting in. And that is the biggest testimony that you have no entry model. You have a wonderful experiment, a laboratory experiment, by watching live streamers. You have a perfect sentiment indicator if they have their chat window open. Not all of them do. You have a wonderful psychology experiment by watching them engage their chat and lose their mind and then become emotionally attached to an idea because somebody rose up as a breaker in the community saying, I challenge your initial expectation on the marketplace. Sometimes the live streamer is right. Sometimes that breaker guy or gal that stands up in there and says, no, I don't think it's going to go there. They're right. The argument that I'm looking for, this is why I use these live streamers. I'm telling you exactly how I do it. Like in the past I've mentioned it, but I'm literally telling you the science behind it all here today. Because I want you to go out there this week and use it the same way, and you're going to be astonished. Now, many of them are listening to me. In fact, probably all of them, let's be honest. They know me, they know that I watch their stuff. But I'm not watching them to learn how to trade. I'm not learning how to follow them. I would never trade like any of them. In fact, I never would trade like any of them. I'm looking for opportunities to go against their chat predominantly. But in the rare instances that the chat window doesn't have a polarizing argument about where they think the market's going to go, because really what I'm looking for is if I'm bullish, I want their chat to be really bearish, because that means I'm diametrically opposed to stupid people. So if I have someone in that community rise up, okay, rise up and say no to the live streamer that says they're bullish or bearish. Whatever their initial expectation on price is, I'm looking for one person in their chat to rise up and say, I disagree with that, and here's why. I think it's going to go to this price level, opposing the person streaming. So now what do we have? We have a chesting up between two personalities. One has a vested interest in being right. The other one can be wrong and it doesn't hurt them because they're among the peasants, right? Who cares? They just get lost in the whole frothing of everybody talking about their nonsensical perspective. But the person hosting the stream, if they're weak and they don't have a model and they're simply out of control, they have no discipline, no self-control, absolutely none, and they have a weak psyche, I'm looking for that moment when that person, that breaker that stands up amongst all of them and challenges the live streamer. And if the live streamer takes that bait and shows their hand, you can literally hear and see their whole demeanor changes. Their body language communicates crazy town. It's literally, they may be slack in their chair, right? They're sitting in their chair, they're real relaxed, and somebody rises up and says, I oppose you. Immediately, their countenance changes. Their shoulders rise up. They're sitting up high in their chair. They either start dancing around, moving around. If they have props around them, they're moving their props around. Okay? Why? They're nervous. Because now there's an argument that their community has posed, and now they have been challenged right on the spot on a live stream where people are watching. So now it's not just simply, I think it could go here, and if it doesn't, who cares? It was something we were just watching. But now because we have a real arm wrestling match from one opinion to another, and the other person that made that initial challenge doesn't have to be right. He or she does not have to be accurate with their expectations, but the live streamer is held to a larger degree of accountability. They're the professional. They're the number one trader. They have what? They have all the expectation placed on them. And if they fall into that trap and that snare, and they say, all right, bet, and they do everything to force that contrarian opinion, they're losing money. It ain't going to go their direction. If they do make money, after they lose a trade, they flip and they go the direction. And they're chasing price. There was no entry mechanism there except for, I'm wrong, let me just flip and try to get the money back. And over leverage it to the hilt. That's the kind of stuff I'm looking for when I'm watching live streamers. I am not trying to copy their trades. I'm looking to fade them all the time, 100% all the time. Every single instance, I'm looking to fade them. Because largely, most of them have a model that repeats with consistency. They're just trading intraday volatility. And that can be hit or miss. But professional gamblers, if they manage their money right, they don't over leverage on every single trade, well, guess what? They can weather a lot of losing trades and still come out ahead. But the more braggadocious, the more attention-seeking, the more controversial or drama-inducing characters online, they make it easy for sentiment. They make it themselves very easy, or they bring in people into the live stream that you can read like tea leaves, like literally, like you can read the perception of stupid opinions. They're just highly emotionally charged individuals that they want this thing to happen. And it usually starts with whoever's the most talkative in the chat. Like I have a list of certain screen names that I know haunt certain live streamers. And I'm looking for them to start chattering initially. Because usually they're the ones that lead the charge about the stupidity. It's going to go here, it's going to go there. I think it's going to do this, it's going to do that. Okay, I'm looking for those jokers to say something that is diametrically opposed. That means opposite. If I'm bullish, I'm looking for them to step out there and say they're bearish. Done. I know exactly what I'm doing today. And I don't care what the live streamer he or herself are doing. It doesn't matter. It does not matter. I'm focusing on the chat because chat is street money. They care about being right in the presence of other people. That means that they have no expectation of following a sound model. They just want to gamble on the notion of being correct in the presence of other people so that they can get their reward. Because they're not trading with real money. They want to hear somebody else say in the chat window, bro, you called it. Bro, you were smart. Bro, you did it right. Oh, man. That's what they're looking for because they're not trading with real money. So they're doing the only thing they can with the economy they have to work with, which is being broke, and they're not actually trading with real money. They're throwing their opinion out there in the ether, and if they're challenging enough to challenge the live streamer, that is a supercharged sentiment. Now I have two people wrestling with one another. I know that if this argument takes place, then I'm going to watch the mannerisms of the streamer, and whatever they're going to do, I'm going to fade that. Because they're going to force themselves to do the opposite of this person that's acting as a breaker in the community, in the chat window. So I have the perfect Frankenstein experiment where this person's going to go completely ballistic because they had a person in their community had the audacity to challenge them and say they're wrong. They completely lose the plot. They have no idea what they're going to do now, except for I got to do the opposite of whatever this person says. So if they had a plan, they don't have it now, and they're going to just do something impulsive. And when the market gives that initial Judas swing, whatever the direction that is, if it's setting up the opposite direction of where I want to trade, if I'm bullish, I want to see it drop. Many times, if the instance of this person in the chat will rise up and say, I believe it's going to go up, when the streamer says it's going to go down, what's the streamer going to do? They're not going to side with the person in the chat because that means they're a follower of a person in the chat. If it's a man that's streaming, they're really going to stand their ground and say, oh, and they're going to ridicule that person in the chat, and they're going to do the opposite, and they're going to try to make money going short. I'm going to go long in that short, in that Judas swing. Their live streamer is going to lose and have to either concede and say, I'm done, get stopped out, or if they're smart, use some kind of low risk entry model to go long. But then generally that usually doesn't happen. They usually just watch the market go and they complain about, oh, see, man, I wish. I don't ever talk about the market. I wish. I don't talk in terms of regret. I'm not surprised. Okay, these are all characteristics of people that don't know what they're doing and they're reacting to price. If you don't have an expectation of what you expect to see in price, then you don't have a model. If you don't have a model, you're gambling. That means that you have no statistical probability to measure in continually seeing the same outcome in your favor repeating. You have no expectation that you can measure scientifically with data that suggests that what you're doing today should repeat tomorrow. You don't have that. You're just impulsively chasing whatever's going on. And if you entice other people to share their opinion and you're influenced by that, you are creating the perfect sentiment indicator. And for people like myself, we use people like you because you are doing the very thing we're hoping for. We want somebody that's reckless. We want somebody that's impulsive. We want somebody that has no rhyme or reason why they're getting in. They're just chasing price. And if you're chasing price when it's going against the underlying direction of what we expect to see happen in price, we know that we're looking at a Judas swing. And you're getting caught up in it, in a snare. And you're getting stopped out or getting crushed. And if you have the decency or honesty and show that you've lost on that account, many times I don't believe that's occurring, but it doesn't matter. I don't even need to see their results. I just know when they subscribe to an opinion, and if it's an arm wrestling match between a person that's in their chat, that is a wonderful experiment for you to see how people get emotional about trading. They get very dogmatic about the outcome of a trade because somebody said this, so therefore, no, I'm going to challenge that view. Well, is that challenging view sound in the technicals? Is what you're suggesting as an argument to somebody saying you're wrong initially? Because admittedly, some people, they're waiting for something to happen later on in the morning. Okay, I'm not suggesting at any measure that their initial expectations is what they're going to stick with all the time. Because sometimes I'll have something I would rather see this, but if the market shows me something else, then I know, well, what I was hoping to see, that did not give me the opportunity I would want to see normally. So then I would change my model and say, okay, I have an opportunity to take 20 handles, 30 handles out of this. And then once it goes there, then it should probably give me what I'm looking for. So it's a matter of what we're getting at the opening bell in those first 30 minutes. Admittedly, I will concede that much. But generally, live streamers are very emotional, except Mr. Matt Miller. This guy looks so unfazed. He's sitting out there like, yeah, well, it is what it is. I'm just watching price. And I never see him get emotional. Like, I never see him get emotional. I never see him get emotional when he makes money. I never see him get emotional when he loses money. I never see it. And that's a wonderful characteristic. So I don't use Matt in that regard, but there are a few people in his chat that I focus on. And when they're opinionated and it's opposed to me, I like that. Apart from his live stream, there's nothing that I look for there. I don't see anything to say anything more about it that would be used in a way that would be viewed as nefarious. Like, I'm not trying to be a villain because I like Matt. I think what he does is good. He doesn't talk any negative to other traders, other live streamers, nothing like that. And he runs a very, very tight community. But it's still, once in a while, there's a few people, there's like 4 or 5 guys in there that will just be rabble rousers. And he doesn't really give them any attention. And not that they're trolling him, but they'll either say stuff about other YouTubers, lesser known streamers, or myself. And as soon as they start saying that, that means that they have something to prove today. And then they're going to give you the opinion of what they think the market's going to do. And I love when they do that, and I'm opposing it. I have 1 or 2 things that I'm looking for across these live streams that other people are doing. And if I have a sampling of at least 3 live streams in their community saying something in opposed to what I'm expecting, I have the perfect sentiment indicator that I know I'm on side. That means I'm right, they're wrong. And that's how I use it. But the only time I use the influencer or the live streamer themselves is when someone rises up and challenges them. And I can only get that information by watching the first few minutes. So yes, audibly, I'm listening to 4 or 5 people talking all at one time. 2 of them are kind of quiet. They don't say too much, but the other ones are like constantly talking. So I'm allowing my ear to pick up on key things, key expressions. And one of them is absolutely nutcase. And when they go off the rails, it's easy to notice when they're emotionally and psychologically committed to one side of the marketplace. And then I go back and I scroll through the chat and see who made that person that's streaming, go crazy. So when I have that, I have the perfect sentiment indicator. And then I'm listening for them to say, if you're trying to go short right here, if you're trying to go long right here, you're just doing it wrong. You're just doing it wrong. Blah, blah, blah. And I'm like, that's exactly what I'm looking for. Because that's exactly what I'm doing at that moment. As soon as they say, you're stupid if you do this, if you're trying to look for shorts right now, I would never look for shorts right now. I'm going in, I'm looking for a fair value gap or a stop hunt on buy stops, and I'm shorting it. I mean, that's what I'm doing because I have the perfect opposing weak street money view opposing what I'm expecting to see in price delivery. And it's uncanny. Uncanny. The hit rate, the strike rate is phenomenal. Only based on sentiment. And I use that in the opening 30 minutes. After 30 minutes, I don't care what they're doing on their live stream. I don't care if they made money or lost. I don't care. But I'm using that intel for the first few minutes because I want to see what people with less understanding that are prone to gambling, what they're thinking, and then what is their community who follow them religiously, what are they either in support of, or if one stands up and says, no, I don't agree with that. And then it causes that live streamer to go off the rails. And then now they're emotionally and psychologically committed to being opposed to them, not following price action. They're just simply arguing now. So that's a perfect sentiment indicator. You're trading on nothing except for your emotional response to someone saying, I don't agree with you. And it's just a wonderful, wonderful observation for you to do. It only takes about 20 minutes of your morning session. And really, if you look around, it isn't hard to find the most loudmouth ones. And if you focus on them and their community, they'll give you the perfect sentiment indicator. It's so fascinating. It's unbelievably, it's sustainable. It's for at least a year and a half now. I've noticed that it's very consistent. And if you have something that you know is high probability by your own definition in trading, and it's opposing that, oh, that's like a lead pipe cinch trade. It's easy. And you're using the influence of someone that doesn't know what they're doing, but's trying to communicate to people watching them that they do. And it's remarkable. It's wonderful. And I don't have to be a mean-spirited person to say who they are, and no one's victimized by it. But that's what I do. I take advantage of their myopic perspective, and they're introducing emotion, they're introducing pomp and clout, and all that stuff just brings with it the likelihood that they're wrong in their expectation and price. It's simple. They might get lucky when they chase price and they get their 10 handles or 15 handles, 20 handles, but they're participating in the actual Judas swing. So if I know that I'm looking for that run up and they're part of that run up and they're real talkative and they have a range objective that's going to go way beyond where I think the Judas is going to end, then I know I'm good. I'm going to be selling short in that where it goes in my premium array. Or if it drops down into my discount array, I'm going to buy in that low. If you look at my examples when I'm showing my executions, I'm buying that low candle or I'm selling that high candle. And it's because at that very moment, it's doing what I expect it to do algorithmically. And chances are, with a great deal of probability and consistency, somebody on the internet is talking it up on the opposite side and they don't have any understanding what the price is doing. And that's a day in the life of ICT. That's what I'm doing. That's exactly what I do every single morning. So when I was live streaming, I wasn't able to do that because you would hear whoever I was listening to. I didn't want to embarrass anybody. I didn't want to cause any kind of needless drama because it doesn't really matter who I listen to. It's who is listening to them, and I'm reading them. In the rare instances that two of them get all animated about someone challenging their view, because there's only two of them that I've used that perspective on, because the other ones are they're not all that animated. If you watch them, they'll be kind of boring, actually. This is exactly how it should be, because you're trading. You're not in there trying to have like a Cirque du Soleil event, right? But anyway, I went on a little bit more than I wanted to. I didn't have to charge anything extra, so I gave you a rundown on what I expect to do this coming year. I talked about filtering out trading opportunities on days that are going to promote low resistance, how to very simply determine when that is and when that isn't. The framework I outlined in here is like this golden ladder framework where if you use those three primary principles, if they're very clear in what you're trying to trade and you apply any PD array, and I'll argue and say this, forget my PD arrays. Okay, if you use the logic I outlined in this discussion today, traditional retail stuff like moving average, stacking, like if you're bullish, and say you have a 9 period and an 18 period moving average, okay, exponential, and you're bullish, and that moving average is, both of them are starting to slope higher on a day that you're bullish after a manipulation rather, and we have a target that's unfulfilled. That means some kind of a fair value gap above price or short-term high that hasn't been traded to for the buy side. That movement towards that target, you'll see the moving averages on 9-day or 9 period rather, 9 period and 18 period moving average on a 1 minute chart. The very first fair value gap that trades down into, if you start using that, if you want to use moving averages as a crutch, it'll help you have a little bit of a trust aspect. But all the other things I said here, they have to be true. Because if that's not there, the moving averages aren't going to help you. It's just simply, it ain't going to help you. What'll happen is it'll turn, and then it'll keep dropping, and eventually the moving averages have a crossover. And you'll be like, oh, but the moving averages were no help to me. But having this logic of using the weekly chart, the calendar correctly and then time of day trading, you can look at classic bull flags. They'll work for you then. Look at pennants. They'll work for you that way. Um, all the continuation patterns that you see in John Murphy's book, if you use this golden ladder framework that I've outlined here, that's what unlocks your retail trades and why they work and when they work. But if it doesn't have that, all that stuff that you're trying to apply and look for in price patterns and stuff, it's nonsense. You're getting fooled by randomness. The market has to move on a higher time frame basis. Why? Because there's institutional sponsorship behind those weekly moves. Those weekly ranges aren't by mistake. They didn't just happen. A lot of volume was pushed through to create that candle. And it's not your volume. It's deep, deep, deep pockets that have to spread their buying and selling over days, not just single, like 1 minute candlestick dropping down. But you can participate in these larger moves by facilitating your entries and exits by these entries and exit strategies that I'm teaching with my PD arrays, where it allows you and affords you very small risk because you can define where you're trying to get at and how far it should move away from that and still be good. And if you trade with that as your mechanism by having known when there's going to be high resistance, not trading that, low resistance, trying to trade in that, trading with an economic calendar day that has a medium or high impact news driver on it. And if it has no economic data, expect it to be high resistance, but be pleasantly surprised if it starts producing low resistance. And the way we identify low resistance is inefficiencies stay open. They don't fully close. And any fair value gap, it gets traded to 1 or 2 candles. It doesn't dilly-dally and spend a lot of time inside them. It leaves. Previous candle bodies are not overlapped with the subsequent candles. That's easy stuff, folks. It's visually identified. Now, as a first-time viewer and listener, you have no idea what I'm talking about because you don't have any framework on that. But that's the reason why I teach the way I teach. Repetitive, seeing it over and over and over again until it's boring. When it's boring, you know it. If you hear me saying certain things that you've learned for years, I've talked about, Larry Williams couldn't figure out how to buy below the opening price, and he would only buy strength. So if he was bullish, he would take 20% of the previous day's range, add it to the opening price, and that's where he bought. And then he used the $2,500 stop. That's his methodology back then in the 90s. That was his model then. I don't know what his model is today. I don't follow him. But that's how he traded then. And that was too much money for me. Like I couldn't take that type of trade with a $2,500 stop. But knowing what weaknesses are, it's important. And until you go through the process of figuring out what they are for you, you won't know what they are and you won't be able to overcome them. But you have to start with some kind of foundation, and the foundation is knowing that trading in high resistance liquidity run conditions is problematic for me too. And there's no shame in me admitting that. What that does is it proves that there are algorithmic signatures in price. There are times when you can completely identify with no ambiguity, with no uncertainty. This is a market that I don't want to be trading in right now. Why? Because every candlestick, every new candle range or bar overlaps 60 to 70% of the previous candle range. If you see a lot of that stuff and any inefficiency gets filled in and it stays in there, you're in a market that's in no hurry to go anywhere. So why would you expect explosive price delivery in that day? Can it happen? Sure it can. But when are you going to time it? Because I can't do it consistently. Think about that. I'm Inner Circle Trader. I'm the man. And I'm telling you that I cannot get the traction I can get. I look like a freaking wizard in low resistance liquidity run conditions. No one's going to trade better than me in those days. Never. It ain't going to ever happen. I will buy and sell all day long. Up, down, up, down, up, down, and rack them up. But I can't do that in a high resistance liquidity run day. That is not weakness that should be looked at and made fun of and mocked. It's me saying that I lose my edge in that day profile. So admitting that is a weakness in my trading, it's a strength by me identifying it and not falling victim to it. It's no longer a snare. When I was 20, I blew accounts in that over and over and over again and didn't realize it was happening. Think about that. That's a game changer. And it's somebody telling you what they were doing wrong. And it took years to identify what they kept doing over and over again. Me. I was doing it wrong because I couldn't identify that. Because none of the books I bought, none of the courses, none of the authors, none of these people, Andrew's Pitchfork guy didn't talk about this crap. It didn't happen. Nobody talked about it. Larry Williams didn't talk about it. I would love very much to be able to say, my mentor, XYZ, taught me this. But they didn't. And it's a truism in the marketplace that once you see it and you really understand it, it exists. And it will define whether or not you should trade or not. And that's the biggest advantage every trader needs in the beginning, because we all want to trade every single time we have the opportunity to. I got money in my pocket. I got girl money. Where's the bar? I hope there's some honeys there. That's the mind. That's the mentality. That's how it is. But you need to know definitively, without no uncertainty at all, why you are not, absolutely not participating. And you don't care what ICT is doing. You don't care what his best students are doing. You don't care what Tom, Dick, and Harry's YouTube streamers are going to do. You don't care where they're streaming from, what they drive today, how much money they lost doing that. You don't care. You know that this is a rule that you have to live by as a trader. I am not trading in high resistance liquidity run conditions. If you start that way as a new student, you give yourself such an advantage. Because it will, number one, create discipline, which is absolutely necessary. Self-control, which most people don't have. They don't have it in the real world, and they certainly don't have it in their trading. And you need that, or you will lose everything and more. And that scar tissue will make it difficult, even if you have the money to put back into a new account. You're going to be real scared to take the next trades. I'm scared to lose money because I just blew 17 different accounts trying to get these top step accounts passed. All that stuff's avoidable. All of it is avoidable. And they're lessons that you don't have to spend a whole lot of time studying to see it and recognize it. But if you see it, don't try to say, well, I'm going to ignore it because I want to be trading today. I won't have another opportunity this week because my work schedule, my university schedule, my sleep schedule, my personal life won't let me do it any other day this week. So I have to trade today, ICT. You don't get it, bro. No, I get it, but you're about to get it. You're about to get it, bro. You're going to get regret. It's discipline, and it's all about deferring that immediate gratification of doing it right. Because it's unreasonable, it's unrealistic for you as a brand new student or a very new student to expect to be able to trade every single day profitably. It is not going to be a consistency delivery. It's not going to be consistent for you to deliver that to yourself. And the biggest opposition to that is because you don't recognize when the market's in high resistance liquidity run conditions. It means it's going to spend a lot of time in ranges. And when it's doing that, I don't want to trade in that. It takes a whole lot more babysitting in every trade entry that I do. And in front of my private students, they've watched me do this. And they've seen how it's not like typical ICT where I can get in there and smoke it up and down, and perfect entries, perfect stop loss presentation of it can go right to where I think it's going to stop right short of it and not hit my stop loss. I cannot do those types of trades in high resistance liquidity run conditions. My private students have watched me do that, and it gets stopped out. There's no shame and embarrassment by that. I'm proving why this is important. But when it's in low resistance liquidity run conditions, I can look like I am a time traveler. There's no way this guy's doing that. Oh, yes, he is. And I know how to do it again and again and again and again. But I also know how I will not do it consistently if I force myself to trade in high resistance liquidity conditions. And this is the part that I talk about all the time when I do live streams when I lecture over live price action. You don't even understand what I'm teaching until you go out and try to use this stuff without understanding it, and then you lose money. And you think that doesn't work. And other students will say, you got to go back to back testing and listen to the old streams, and he'll show you, watch what he's doing, listen to what he's saying. And the things I'm saying is how to do less. It's doing the less yields you the most in terms of the results. If you can accept the fact that of 20 trading days a month on average, that you're probably not going to trade but 12 trading days a month. And in really summer months, maybe even less. Are you prepared for that? Or are you going to think that that's somehow some substandard number? Oh, professional traders trade every single day. They're in every session. That's how I used to think about it too. I used to trade like that. You know what happened? I wore myself down. I had terrible sleep. I got sick a lot. My immune system was depleted. I was irritable. I was eating terribly, a lot of junk food. I just didn't take care of myself. And I forego going to exercising and stretching because I wanted to be in the next session. Yeah, I can make lots of money, but my health was depleted. My happiness was affected by that. My restfulness was affected by that. You can make lots of money and be miserable and unhealthy. My wife didn't have the freedom to go out with me a lot because I would tell her, there's a really good setup. I'm expecting to see this happen in the pound dollar. If I can get the trade off before this time, I'll let you know. And she was, okay, well, whatever happens, happens. And she disagreed with it. But I knew over years doing that, it was just like, well, that's not what I wanted to hear, but, you're Michael. So I understand this is what you are. I knew it when I met you. That's the wrong way of doing it, men and ladies. If you are doing the same stuff, you got to put your relationship first, because if the person you're with in your relationship is supportive and they trust that you're trying to balance everything, you're not just trying to pour everything in there into trading and studying, and then you don't have no time for them or no time for your family, no time for social time with your significant other, they won't share in your excitement and your passion and your due diligence that you're placing in pursuing this. They're going to see it as it's competition for them. And they're going to not support you. And you're going to look at them and say, well, listen, you don't support me. So then you're going to have a problem in your relationship that you created yourself. I did all those things. I did all that stuff. And you're going to see how I streamed down to very selective things in 2025 where it allows me. You think I saw a guy, I don't know if it was this morning or I've lost track of time now, but if it was yesterday or today, somebody said, you need to get off social media. You appear like you don't have a life. Dude, it takes me a second to open up my phone and see something that spurs some kind of snarky little response, and I type that out and done. I'm still doing everything I'm doing. Everything I'm doing all day long. Twitter isn't taking up much of my time. I don't know how long it takes you to type up something or come up with an idea to post something, but it don't take me long at all. I mean, if you listen to when I talk, I'm going on and on and on and on, like a fire hose. And it's nothing for me to put a little snippet of things out there on Twitter. But, as a younger man, I poured myself into the charts, into my online community on Internet Relay Chat. Like I was all the time in that. All the time in that. And I had no time with my wife. I had no time with my children, and it affected me. It affected my relationship, and it was terrible. But I couldn't recognize it because I was too passionate about pursuing my wants, my needs, my pursuit of validation, sense of significance. I don't need that now. I mean, I'm more significant than I should be in a lot of people's mind, not in my own mind. That's why I tell you, I'm just a man. Don't talk about me. Don't give me your credit. You earned it. If somebody was pompous and arrogant and self-centered like a lot of you think I am, and I've done a really good job of pretending to be that, I'm not, nothing like that in real life, I wouldn't tell you the things I tell you. Like, I am the worst businessman for trying to market for money. Think about what I'm doing. Who does this? Nobody would. If I was broke and needed your money, I wouldn't be doing this on a Saturday. I care about you. I want to see you do well. And I see how easily many of you are influenced by stupid people that are, they're motivated to monetize their own thing by tearing down other people. And I believe that if someone were to have a real approach, sincere approach, not to live up to my, think of them as a bona fide cult member, but as someone that really sat down and tried to use the things I've taught, keep it based on simply just that, and they took no opinion from other people, and they put enough time into it, they had very low expectations in the beginning, and let their own natural progress dictate the pace of how fast they should raise their expectations as they go forward, you will be quickly convinced that there's no better way of learning how to read price action and then engaging in price. Notice I didn't say trade profitably, because something happens the first